Hello, everybody. Hopefully you can hear me. Anyone hear me?
All right, Matt. Here.
Hey, how's it going, mate? Is that Kieran?
Yeah, you're all right.
How's it going, mate? How's it going? Hey, PJ. Hey, Chris.
Hi, Matt. How are you?
I'm good, mate. How are you?
No, I'm great, thanks.
Good to have you all in here.
No, pleasure to be here.
All right, just bear with me whilst we let everybody in. Cool. Oh yeah, we'll give it a few more minutes before everyone gets in. There's a few people who messaged me, unfortunately, who couldn't make it this week, but just a few more coming in now.
Hey, everyone.
Hey, how's it going? Who's that speaking?
It's Betinho.
Hey, mate, how's it going?
Hello there.
Hey, is that Savage? Hey, Dom, how's it going?
I'm a little bit sick, but yeah, I'm fine.
Hopefully not COVID.
No, I don't have COVID. Everything's safe.
Good. Good to hear. Well, there's a lot of you in here. I didn't expect to have this many tonight. There's a few who did message me, couldn't make it, some of the usual faces, but yeah, I'll just give it a few more minutes for a few more people to roll in. Obviously there's quite a lot of people who've joined the community in the last few weeks. It's probably be the first meetup you've been to. So the format these usually follows, they are super informal. It's not like a webinar or anything like that. It's usually a good place for you guys just to bring any questions that you've got that you feel would be better answered, sort of just me talking to you or hop on the charts, sharing my screen. You guys can share your screen as well if you've got any trades that you want to mark up. If you want to go through your journals, your trade plans, literally anything, this is the kind of time to do it. And yeah, just to talk anything really. But yeah, if there's not like sometimes it's quiet, sometimes people have a lot of questions, then usually I'll just go hop on the charts and we can just spend the rest of the call going over today's price action in a bit more depth and just looking at sort of the trading opportunities if there were any. So yeah, at any time, feel free to come and leave as you go. Like I said, it's really informal. Also, feel free to interrupt me at any time if you have a question or if I'm explaining something and you don't think it's clear enough or you're not quite sure. Just literally just shout over me. That's the easiest way to get these things going. So don't be afraid of thinking you're being rude or anything like that. Yeah. Has no one got their webcam on?
My first question is who you keeping out of that room with that kettlebell jarring the door?
I have a little puppy that is extremely clingy.
Oh, okay.
Yeah. Don't worry. Haven't got any anyone trying to break in. No, I have a dog that is extremely.
Knocking the door soon, and he's not a puppy.
Sorry, say that again.
Mine will be knocking on the door soon, and he's not a puppy. He's a 10-year-old English bulldog.
I guess they're always clingy, aren't they? They never really get used to being away from you.
He's like 28 kilos. He punches the door.
28 kilos? Yeah. That's like a suitcase. That is that's a heavy dog.
A big boy.
Wow. Did you say it was a pit bull?
English bulldog.
Oh, English bulldog. Oh, okay. Yeah. Wow. I didn't know they got that heavy, but yeah, I guess they are big dogs. Jeez.
He used to be a little bit bigger, but he's 11 years old now, so age is coming. He's kind of losing his muscles already.
Yeah.
But he's still a very tough guy. Alfredo is his name.
Alfredo. I like it.
An Italian name, an English dog.
Well, we like to be multicultural in the UK, so it works.
And we live in Brazil, so that's
really?
multicultural.
How does he cope with the heat? Is he okay with it?
Yeah.
Yeah, cool.
He spends most of the time sleeping and snoring and farting. I'll take him out like twice a day for a brief walk just to keep his heart beating healthily, but Most of the time he's sleeping or snoring or farting.
Oh man, he's got it sorted. It sounds like he lives the life. Quite envious of that.
Way better than mine.
Yeah.
Eats only real food, that kind of stuff.
Oh.
Yogurt, fruits.
Oh, Matt.
Yeah.
I mean, I have a simple question, but I don't know. I can't get over it because I'm picking my time frames right now.
Yeah.
I mean, I could share the screen right now so I can show you.
Yeah, sure. I think I have to change the settings. All right, you should be able to do it now if you can.
Yes. So what I'm using or try to use right now is like this setup right here, where I just go on the weekly for the major perspective and direction of order flow, and then I will go down to the 4-hour to get my swing points, and on the 15-minute I do like the intermediate stuff, and then of course I go to the 1 minute for the entries of the 15-minute.
Yeah.
And so because I have firstly tried to do that on the weekly and the daily, and then even the 4-hour, but they're like in sync with each other. So the structure points like very confusing, or they work together, and yeah, that could be a huge problem in the longer run.
So are you saying that, just so I understand, that sometimes, or a lot of the times, that your 4-hour and your daily swing points are the same points? Is that what you're saying?
Kind of the same, not directly the same, but very, very like they work together really good. So what?
I don't know who that was, but do you mind muting your mic? Okay, cool. Should be all right.
My phone. Okay, no. Yeah, so I will simply try it with like that way, and I got simple rules to get like the structure done. I don't know, I watched your videos and you use like the wick thing. One wick needs to be under the other one in that way, and then you identify the pullback. But I have a simple rule for that. I just watch for the candle closes.
Okay. Yeah,
so
that can work too.
So if I do like I watch for a low, I search a candle that closed above the other one, like here. This candle closed above the wick of this candle. So this would be probably my low.
Yeah.
And I'm waiting for the break to get my high. But I need to like watch the price before, so I have the vision on the right range. Because if I'm on past price, I would mess up a little bit. Like on the 15-minute structure I posted yesterday, where it told me like to get the zoomed out vision. I wasn't. Give me a second.
I think he said, "Give me a second," and he's coming back. So I'll wait a minute.
Oh, okay, I'm back. So
yeah, there he is.
On the 15-minute, I mess up the structure really bad sometimes.
It's
like the range, like on the 15-minute, I did it where we did it like above.
I think you were just a little bit zoomed in, and you were looking at what I call the internal structure. In between the swing high and swing low.
Like this, and the first didn't saw this one, so I haven't seen the true range. So I used the internal one, because the internal ones, they did get broken. So I used them. And today, just a simple question. Today, you told me like to get the entry. I mean, this one. I waited on the 1 minute for like a shift in structure and a change of character. But you know, my entries were like so unprecise, and I just want to ask you if you have a few tips on that, how I can get my entries better, because they really fucked up sometimes.
Well, I mean, do you follow the same entry models that I use in the course? So essentially, you know, in its most simplest format, waiting for an M15 POI to be hit, and then waiting for the M1 to change character if you're entering on the M1, right? Wait for an M1 chock, then look where the flip occurred, and then essentially enter on the flip. That's in its most simplest form. Is that roughly what you follow?
Yeah, I saw the 15-minute structure. I do use the POIs from that one, and the entry model I do like get stopped out a few like too often. It happens the most that I get stopped out because like a liquidity grab or something like that.
So is the problem more that your M1 zone that you pick is just slightly wrong, but the M15 POI is working out, or are you getting the M15 POI wrong?
My M1 is damn fucked up because I got like a million POIs on my chart, and I don't know which one to use, because what I can do is go like to the 1 second chart and wait for a wake off, but
no.
That's then a little bit too.
So okay. First thing I'll say just about that, if anyone in here, if any of you guys trade any concepts that I don't use or I don't teach in Photon, that's absolutely fine, okay? I'm not one of these people who says when you're in here, you have to trade my way or just the concepts that we use. Use whatever you know and what works for you. Obviously, what I will ask is that you kind of refrain from, I guess, posting that analysis in the Discord, just because it might confuse new people, right? But if you use EMAs or use Wyckoff or anything, that's absolutely cool. Continue to use that. But just more specifically to answer your question and potentially the problems you're having, if you're getting your higher time frame POIs correct and the zones that you want to trade from on the higher time frames are playing out, but that you're having a little bit of trouble with accuracy, the quickest solution I can give you is to jump up a time frame on the entry time frame you've been using. That'll be your quickest one. So if you've been using the M1, go to the M5, and that can just help clean things up a little bit. Yes, you are going to have to use a wider stop and sacrifice a little bit of risk reward, but if you just want to kind of slowly boost your strike rate, that's an easy solution. But to give you kind of a better answer for more specifically trying to improve your M1 entries, if M1 is the time frame you want to use to enter on, it's hard for me to give you an answer unless you can show me some of your examples. But what I would guess is you're probably, well, are you entering on the extreme of the moves, and then is price breaking the high even higher? Or
most of the time, I think I have all my charts cleared right now because I do a new analysis on every Monday. I'm like a little bit behind right now. I think that was the aggressive one. That one I can clear too. That was the aggressive one, but on BTC right now. Okay. Never mind. I got triggered in this trade, so it's pretty damn like this one. On this trade, I got triggered in right now, and on this trade right here, I used the 4-hour POI because I just wanted to wait for the 15-minute, but all the time I don't get the entry of that, so I just use the wider stop and use the 4-hour zone. But I have the 15-minute range marked up, so I would reduce my risk if the trade goes against me from like an area right here. So I don't know what would be a POI to trade bullish of them. But I mean, the 15-minute is bullish right now.
Yeah.
This was the last. Then we got this high, and this high got broken, so this is the low.
Yeah. So I think you're trading pro the 4-hour and pro the daily bearish trend. It's pulled back up into the extreme 4-hour supply zone, I think, by the looks of it, which was where the last 4-hour mitigation was. So if you're following the series of mitigations on the 4-hour chart, if you're following that bearish order flow, you can see if you look to the left of your 4-hour zone, you can see it's already mitigated the last area there, and then that led to the break of structure. So the zone you are entering on is really good. The only thing that's a little bit not so great is you see how when the zone was created, you see how it was a very clean and straight push to the downside. That essentially means there's no inducement in the leg. Okay, so sometimes when that happens, when you have a very clean, like almost vertical push down like that, and there's no structure in the leg, that means there's no inducement for your POI that you're trading from. And sometimes then what can happen is the POI you're trading from ends up getting swept, and the liquidity behind that high is then used, and then the real move goes. Okay. Now, me personally, if you've watched the course, you would have heard me kind of say this a bit, is that I find liquidity can be quite subjective, and I like to keep my trading as mechanical and as simple as possible. So I don't weigh a massive importance on liquidity as maybe some other people do. So that would be a POI that I would definitely still be interested in trading. I'm more just explaining why, if that zone was to be swept, that would probably be one reason as to why. But yeah, you're entering directly on a risk entry. So my advice to you in terms of management would be keep the management simple. If you are trading pro the 4-hour trend and you've entered at the extremity of that swing range, at the top of the swing range, at the extreme supply zone, then really you should be expecting the 4-hour to form a lower low from here. Because if the 4-hour bearish trend is going to continue, it has to continue from here, okay? Because if it breaks that high and closes above that high, then it's switched bullish. So if you've taken a short from pretty much the best area of value you can on the 4-hour chart, in my opinion, you should probably try and hold the majority of your volume down towards the 4-hour swing low for it to form a lower low. Now, you can be obviously more aggressive with your management, and you can start to take partials or however you like to manage on the 15-minute chart if you see that the 15-minute chart is going to stay bullish. Yeah. But that's up to you. It's just, I think you might be cutting yourself short over the long run if you were to always enter 4-hour entries because you're using a wide 4-hour stop. It means you need to let the risk to reward play out over a large series of trades, right? But if you're entering those 4-hour trades and then you're cutting them quite short, the minute, the 15 minutes still looks like it's going to be bullish. You're only going to close for what, a 1-to-1, maybe a 1.5, maybe a 2-to-1 at best in this scenario, and that risk to reward isn't very good on average. You're going to have quite a high strike rate for that to work out, if that makes sense. So yeah, to keep it simple, if you're going to be taking a 4-hour entry like that with a reasonably wide stop, right, then I wouldn't pay too much attention to the M15, especially right at the start of the trade. I would try and let that trade play out and just accept the risk. Where it would be different is if you obviously waited for price to tap into the 4-hour POI, then you jump down to a lower time frame, say the M1 or the M5 or whatever, and you had a trade, then obviously you're going to have a much tighter risk reward. Then yes, if the M15 stays bullish as it comes down to the M15 demand, then you can start thinking about taking heavy partials or trailing or whatever, because at that point you should be running over 5R, right? So it makes a lot more sense. But yeah, again, to keep it simple, 4-hour entries, try and another simple rule, right? Whatever time frame you enter on, do not manage any lower than that time frame. You should really be going up a time frame, if anything. Like if I enter on the M1, I'm not managing on the M1. I'm managing on the M15 or higher, because I'm using the M1 to get me into an M15 move. Likewise, you're entering on a 4-hour chart, ideally to get you into a daily move. So yeah, does that make sense?
Yeah, it totally makes sense. But you mentioned the liquidity grab. I mean, I only entered on this. I mean, I wouldn't enter on this at any time, but I saw like the liquidity, it grabbed the liquidity from this POI right here. I mean, you could have entered off this POI and right off this short, but I missed this move. Unfortunately, I missed it. So I thought like this order block or like area of interest or whatever you want to call it, caused the breakout structure of the daily move and the liquidity of the daily order block right here. So this is the only reason why I entered. And like the weekly, I mean, it's Bitcoin, you can't, the structure, oh, it lags. So I marked up the weekly high and low. Ideally, one price to trade in one of the POIs, I will mark up. Like if this one fails, it will give me a little reaction. But if this fails, I look forward for the lower ones. So the only reason why I entered is because the daily and the 4-hour gave me the reason to sell, and I have a proper target from the weekly. So you mentioned I should go a time frame above, like on the daily, to manage it.
Yeah, I mean, as a general rule, I find it's better just in terms of risk to reward. But obviously, you've still got a reasonably tight stop there. So if you had like, what is the risk to reward to the 4-hour swing low? It's probably 5R, is it?
Yeah, around that, like 5.
Yeah, so
5.5.
That's not bad. That's not bad at all. Obviously, but like I said, yeah, it's more ideal if you're going to catch that daily leg. So yeah, I like everything about that POI. It was literally the only negative confluence, just based on what I could see, was that it didn't have any inducement in the leg, so it was quite a straight push. But other than that, that's a POI I personally would trade from. I haven't backtested crypto. I'm not a crypto expert. Never claimed to be, right? But if that was on euro dollar, I'd be more than happy to trade that because, like you said, it's a sweep zone. It's the last mitigation. It led to the break of structure. It's at the extremity of the swing range, which is always my favorite because that is where the bearish trend has to continue on the 4-hour chart. And if it doesn't, then we're switching bullish. So okay, we wait for it to switch bullish. We then draw the next bullish swing range where we are within, and then obviously we then look to catch the high low and we can trade it to the upside. So it doesn't really matter, and that's why trading from the extremes is always highest probability. But yeah, I mean, I'm interested to kind of figure out a little bit more about your, the problems you were talking about previously with your M1 entries, because I definitely think that would be something we could, probably find a solution to pretty quickly. So yeah, maybe in the future, when you have a few more trade examples, you can maybe share with me whenever, if it's in the Discord or next time we have a call. I'd love to have a look at your M1 entries and see if we can spot, what might be happening there. I guess one question I would ask is, when you're taking those M1 entries, is it typically where you will enter on what I call the decisional zone, where it's a zone sort of in the middle of the leg, and then does it go up to the extreme, stop you out and then play out? Or does price go up and spike the swing high and then come down?
Yeah,
do you know?
Mostly it will like I use the area of interest which broke the structure, which caused the break of structure. So for me, it's like the high value zone, but most of the time it spikes into my most extreme one and then drops like hell, or like jumps up like hell. This is most of my stops are like a little bit. I don't know if I draw my POIs false or like I use the wrong ones, but my.
Are you talking about POIs on the M1, or are you talking about your higher time frame POI?
POIs on the M1. On the M1.
Are you entering on flip zones?
No, not especially. I wait for a simple shift in market structure and want to ride the momentum.
So what I mean is, when you see, say, the shift in market structure, and then you're looking to think, okay, well, what zone do I want to enter on? Are you just trying to decide what looks to you like the one that led to the M1 breaking structure? Is that essentially what you do? You just try and look for where the supply came in on the M1 and then try and enter now?
Just try to where the move came from, or like where the break of structure got initiated, especially. So
okay. So what I'll say to you is, this is where I think, I don't know if you've seen flip zones before or you've watched the lessons yet, but that will be basically the secret sauce that I think will help your strike rate there and stop you from taking those losses a lot of the times. Because I mean, do you know anything about flip zones? Or
I watched the course, like the video where I mentioned I need to watch it. I watched it right away. So it's like it's like you got the zone and price trades into it. It's a rejection but breaks. Is it right? Have I?
Yeah. Hey, I'll tell you what, I'll share my screen. It might be a little bit easier we can go over it. Cool. Let me.
I might protect my position right now, but I'm unsure about.
My advice is, obviously, if you've taken a 4-hour entry, sit on your hands and let it play out. But obviously, depends on how much you're risking. if it's not a trade that you're comfortable with.
Yeah, I was pretty confident, but it's like a high. I have a lot of risk sitting on the straight. Like, I don't want to mention.
Well, I mean, I'm not going to give you a lecture on risk management. I'll let you figure that out.
Sure.
Okay, let's quickly talk about a flip zone. So let's just do it without price action. It'll be a lot easier. So let's imagine price comes into our POI. So let's just imagine, right, this blue box here is an amazing high time frame POI that we're very, very confident the higher time frames is going to form a lower high here and continue to the downside, right? So we drop down to, let's say, the M1. The M1 is our entry model, and at the moment we see price, the M1 is making internal higher highs and higher lows, higher highs and higher lows. It enters into our M15 POI, okay? And the first thing I'm always waiting for before I even consider an entry is I need to see a bearish change of character if I'm going short, on the time frame I'm entering on. Okay, so literally what I do as price is coming into my POI, I just mark out like wherever the nearest low is. I'm just getting this the right one. So as it was coming up, right, and then we break a new high, I'll trail it to this low, and then obviously I'll trail it to this low as we're here. And this is the most recent internal low that I will need to see go, right, to get that bearish change of character. Now, when price comes down, what you'll often see, or what ideally you want to see, is there's going to be a little M1 demand zone here, right? So bear with me while I draw this. Okay, so price has entered RM15 POI. I need to see structure shift, so I need to see this low go to make an internal lower low. But what I also want to see is I want to see the flip. I want to see where has supply taken control, okay? So I want to see demand fail, and I want to see supply take control. So sometimes what you'll see is price will just come straight down like this with almost a straight vertical move, okay? And there's no flip. All we have here is a chock, okay? And that's fine, and you can enter on this zone. It's what I call a structure zone. Obviously, some of you guys might not have watched the supply and demand lessons yet, but that's essentially it. It's just a supply zone that leads to a break of structure, okay? And you can enter on that. But what can happen a lot of the times, and what is probably happening to you on crypto, is that there will be a zone in the middle of the leg, and let's say there's a zone at the top of the leg, right? And you've got two zones. So this is what I call the decisional, this zone here, and this is what I call the extreme, okay? And a lot of times it can look like the momentum came in with this decisional in the middle, so you will enter short here, right? And then what can happen is price can come up, stop you out, and it can hit the top zone, right? It can come up here, hit the top zone, and then go, and then you never know what zone you should have picked, right? So the reason why the flip is so key is it gives you a lot more accuracy of exactly where the supply came into the market to overpower demand. So what you want to see, right, is when price comes down, it's key is that you see price react, okay? So the reaction is almost the most important part of this, is you need to see price move to the upside. The reason why that's important is because it validates that this red box here, which is M1 demand, it validates that the demand is a good demand level. We need to know that there was buy order sitting there. We need to know that there was demand in the market there, and that is what the reaction tells you. Now, a demand zone's job is to do what? Its job is to make a higher high, okay? So for this demand zone to do its job, it needs to make price break this high, okay? So if price reacts and it moves up, but then it fails to break the high, and then you see price come down, okay, that means we now have a flip, because price has reacted to demand. It's validated that that is a demand level. It's tried to do its job, right? It's tried to make a higher high. It's failed to take out the high. It's failed to breach this high, so it's failed to do its job. And then what has happened? Supply has stepped into the market to overpower this demand zone. Okay, so this area here where that supply entered into the market to overpower demand, to flip to supply. And what did we also get? We also got the shift in structure. We got the change of character, okay? So that is where demand has now flipped to supply. Okay, so I'm just going to kind of go over that a little bit more sort of quickly again. This was our chalk line, right? This solid red line. Now, when you see the reaction from the demand zone, right, that reaction kick in, you mark out the low of the reaction. In this case, I'm just going to use a dotted line, right? And what I'm waiting for this entire time as that reaction kicks in, as long as price does not come up and breach this high, then I know that that supply has failed once price closes below the reaction. Okay, so I'll say that again. When price comes into demand and it bounces and it tries to make a higher high, I mark out a dotted line from where the reaction started, okay? And I call this my failed reaction line, right? This dotted line. So the moment that price breaks and closes below that dotted line, okay, for me, that now means that demand has failed, this red box has failed, and supply has now taken control. So the moment that price closes below that reaction line, as long as it didn't break the high, right, that tells me that now supply is in control, demand has failed, and that is our flip. So I need to see price below the dotted line for the flip, but I also need to see price wick the red line, right, break this low here to make a lower low. So that red line tells me that structure has shifted in my favor, that the internal structure has gone from bullish to bearish. That's what the red line is, right? Price taking out this low to form an internal lower low. And the dotted line for me, that's what I call the failed reaction line, because price has come into demand, demand's tried to do its job, it's tried to make a higher high, it's failed to do its job, and price has then come down. And once it closes below here, right below the dotted line, now supply has flipped to demand. So what this now tells me is my higher time frame POI, my N15 POI is holding, okay? structure has now shifted bearish. It's in the direction I want it to be because we've taken out the low to form a lower low. And what has also happened is demand has flipped to supply, right? So I've seen everything I need to see. So where do I enter? Well, let's say there are two zones, okay? Let's say there's the extreme zone up here, right? And that's basically what I call a structure zone. And then let's say this is your second zone, okay? So it's this buy to sell, right? And that's what I call the flip zone. So the way you can draw this is from the base of the reaction to the top of the reaction, okay? And that's what's called a buy to sell zone, okay? Because it's the buy to sell. It's a rubbish name, but that's what it's called, right? So you can either take the entire range, or of course you can refine it a little bit if it's multiple candles, okay? Okay. And that's,
I think
someone
needs to mute.
Yeah, just mute yourself, please, if you're not answering the question. Okay, so hopefully you guys are following me. Just interrupt me and shout me if you're not. Don't worry, you're not being rude. If you ask me a question, if I'm confused, if you're confused. But essentially, right, you then have this zone at the top. That's what I call the extreme, and this is the decisional. But I would prefer to trade from this zone now because that is the flip zone, and that tells me where supply entered the market to overpower this demand. Okay. This is not a. Sorry, go on.
Yeah, could I enter? You mentioned like the complete move, the buy to sell move.
Yes. So the way I do it personally, so you know, in the there's liquidity behind the high. Yeah, I think if someone's trying to draw that, PJ, let me just go open the chat box actually. Would the dotted line be the choke or the line below? Yes. So the dotted line, sorry, is the failed reaction line. So I'll annotate it. That's what I call FR, right? Failed reaction. Because you draw a line from where the reaction starts, and then I just need to see price close below that dotted line, okay, for there to be a failed reaction. And the solid line is the choke, okay, because choke is structure, and this for me is the most recent low at that point, okay, because price has made a higher high, it's pulled back to form a higher low, and it's made a higher high. So at that point, the internal structure is trading between the low and the high, right? So that's my choke line. Once we've wicked that for me is a bearish change of character. This here is just talking about supply and demand, okay, the dotted line. So in terms of entering, when price is at this point and we've had our change of character, we've had our failed reaction, and let's say you have those two zones, you have the extreme zone and then you have the flip zone. I would say the majority of the time, I don't want to put a statistic on it because I don't know what the number would be, but almost all the time, I'm looking to enter on the flip zone. Now, obviously, it'll be a little bit easier to explain when it's candles rather than a line chart, but the way I personally would look to enter is I draw my entry box. Okay, this is what the tool I use. It's basically just a supply zone from the base of the reaction all the way up to the top of the reaction. And basically I can enter anywhere within that range, okay, that range supply. Now, the way that I trade, it's obviously predominantly on euro dollar, and I almost always enter on the M1 chart. I keep it very simple, and I like to just always trade with a 2-pip stop loss. Okay, so my stop loss always has to go behind the supply zone or the demand zone that I'm entering on, right? I only give it a very tiny buffer. I'm quite tight with it. And wherever that 2 pips gives me, okay, so let's do it, right? So let's say that's 2 pips. I obviously want it to be a little bit behind, right? So you can see how I've moved it for there to be 2 pips in total. This now determines that I enter here, right? Now, let's say the zone was even bigger, right? For me to get 2 pips behind there, it just means I'm entering deeper in the zone, okay? So hopefully that makes sense. Wherever the 2 pips gives me my entry, that could be on here, it could be there, wherever. That's how I determine my entry. And that's because I'm trading on range supply, okay? Because there could be multiple candles in this pullback, right? And I just choose to take the entire reaction, right? If you don't want to trade from, okay, I appreciate it. If you're new, right, this is going to be really confusing. So don't worry about all of this right now because you will get to it in the lessons. But for some of you guys who don't understand this and you're a bit further along, it will make sense, but please don't be overwhelmed if you're not there yet, okay?
I'm not quite new. I'm just new to this community, but I traded like smart money a few months now. I mean, almost over a year. And I have seen this buy to sell areas very often. But what I do is like I split my risk. If I have the POI in the extreme and my POI like this one, I will just split my risk in half and risk like a 0.5% there and a half on the top one. And if this one gets triggered, it's okay. I will just add another 0.5 position if I get a pullback or a break of structure on minor structure. So I'm just following the order flow and the structure flow on the time frames to manage my. I don't have a fixed TP, so I trail my TP to the most recent structure I enter on. So if I enter on 4 hour, I use my 4 hour structure. So I put the stop loss above the most recent high if I sell, and reversed if I buy. So is it better to split like the risk or like?
My personal view, again, do what works for you. I did think about this a little while ago. Probably about a year ago, I was kind of having the same debate and testing it. And it comes back to, I think we were talking about this earlier, actually. It comes back to what I talk about in the Trading and Edge module about one of the 3 fatal trading sins, and that is changing your risk between trading setups. Because trading is a random, we're playing with random distribution. Okay, what does that mean? It means we never know the sequence in which our wins and losses will come. Okay, so that's one of the reasons why I say you should always use the same risk for every trade you take, because sometimes if you go, oh, this should be 1% or this should be 0.5% because this looks good and that one looks bad, you never know. We never know if that's going to be a winner or loser, and it ends up just messing up your results overall. So I know you're not quite doing that with what you said, but I kind of view it in a similar realm, because let's say sometimes you're only going to get tagged in on here. Well, then if you've only got 0.5% here and you've got 0.5% at the top, but you only get tagged in 1, there's going to be times when you're going to make more money than you're not, and your edges are going to be all over the place due to random distribution. So I don't personally think, okay, I think it's better. It's the way I do it, obviously. So the way that I would do it is, let's say this is the flip zone. This is done everything that I need to see, and I enter on here. But I'm also aware that price could react from here, and I really like the POI, so I'm happy to kind of take a loss here, and I'll look for another entry. So what I do is I set my limit order on the flip zone. Now, if I get stopped out, right, let's say price comes in and stops me out, and then it comes up to this zone, what you can do, instead of splitting your risk 0.5% here and 0.5% here, I would just risk the normal amount that you normally risk on both of them if you want to trade that way. So let's say you always risk 0.5% on every trade, then you can do that, right? And you can have two trades there. But yes, you are potentially going to take -2R. But for me, that's not the end of the world, in my opinion. The way that I personally do it is I will enter on this zone here, and if I get stopped out and it's a loss, I will not have a limit order on the extreme zone. Right, I'll move this out of the way. But what I will do is I will then wait for another confirmation entry from this level. Okay, so let me draw this to show you what I mean. So let's say move me 2 seconds, right? So let's say I set my limit order here, price comes up, okay, tags me in, stops me out, okay, boom, taking a -1R, whatever. Now what I will do is I'll go, okay, is this extreme zone going to hold? Price comes into it, right? It reacts. We then get another M1 change of character to the downside, right? Because remember, for price to come back up to this M1 zone here, what has the M1 had to do to get there? The internal structures had to switch bullish again, right? Because it's come up and it's taken this high. So now it's come up to switch bullish. It comes into my POI. I wait for what? I just wait for the exact same thing again. I wait for a chock and a flip, right? So imagine price comes in, it comes into here, right? So then we probably have, this is where you have to really kind of zoom in and pay attention to price, but you would have another M1 demand zone here, right? That push price up. I would look for price to reject from this zone, come down into this demand zone. I need to see the reaction, remember, to validate that this is a good demand zone. Then as long as the reaction doesn't take out this high, it fails to do its job. Then you see supply step in, right? So demand flips to supply. And what else did we also get? We also got the chock, right? Because, so I'll draw these on so you guys can see it. And then that's the failed reaction line there, okay? Again, if you're new, do not worry about this because this will seem extremely confusing. The price has basically what I'm doing is I'm trading a confirmation entry of this zone just to show me that it's going to hold. So price comes into demand, it reacts, it fails to do its job, it fails to make a higher high. Price then closes below the reaction, so the reaction has failed. We also get this internal low, the structural low taken out. So now what do we have? We have a mitigation of our extreme zone. We have a flip, so supply is taking control, and we have structure shifting to the downside. Structure has now switched bearish again. So where do I enter? Well, it's the exact same thing again. I enter on the flip. So I would just draw this now as my POI, right? And I would look to get short here. Now, obviously, like I said, I put my, don't know why this has gone so big, but I put my stop loss just behind the zone or wherever 2 pips will give me. In this case, sometimes as well, when it's very tight, if I can get my stop above the high, I'll leave it there as well. So just to quickly summarize, if you have two POIs, the way that I personally approach it, probably at least 90% of the time, is I will trade the flip. The flip to me is what is most important. If I can see where there's a flip, that for me is where I'm going to want to trade. Okay, but if I can see there's another extreme zone at the top and I get stopped out, you could just enter another trade in that directly. That's fine. Make sure you test that. But for me personally, I would prefer to see that level hold by looking for another M1 confirmation entry. So looking for the flip again and looking for M1 to switch bearish again. And then I would just look to enter on there. Now, you're not always going to get that. Sometimes it might just tap it and fly, but then I'll just look for a scaling further down here, okay? So that's how I approach that. Now, there are some caveats to this. And I posted something in the resources channel today about that, and it's to do with liquidity. I'm just kind of hesitant to talk about it now because I don't want to confuse people even more, because liquidity does complicate things a little bit. And for those of you who probably watched the first few lessons in the course, you'll hear me say I think it's in the introduction to the technical analysis module lesson, before you even look at the TA lessons, I say that liquidity is pretty much the last thing we look at, because for me, it really helps to boost your strike rate, but it's kind of the final icing on the cake that you look at. You don't need it, in my opinion. You can keep your trading extremely simple and very profitable without liquidity concepts. But we do talk about them, we do discuss them, and we do use them for those as you get a bit more further along your journey. Okay, so I'll very briefly touch on it because some people in here will be experienced and will know what I'm talking about. But essentially, if you have this flip zone here and you have the extreme and you're not sure which one to take, if the flip zone sweeps liquidity when it was created, that increases the probability that the flip zone is going to play out and the extreme zone won't. But if the flip zone doesn't sweep liquidity, then don't trade the flip zone, trade from the extreme. I haven't explained it very well, so I'll just fire up. I don't think you'll be able to see that because I shared the window. But basically, if you check the resources channel, I'll just draw it. Hang on.
Yeah, I'll check it out in a few minutes. But
yeah,
can I do this like on if I have on my Bitcoin chart like a POI right here?
I think you need to share your screen. I can't. Are you still sharing it?
Oh no,
Stop sharing mine. Let me just quickly see because I think
yeah, you can
chat. Just to quickly answer the questions in the chat. So I think Roberto said, would you still do PD in the entry? So I'm assuming you mean, would I still use premium and discount on the M1 for the entry? Generally, no. I keep it very simple. I only use the premium and discount really on, say, like the high time frames on the M15 and the 4-hour chart. I don't really pay attention to premium discount on the M1. I'm just kind of looking for the order flow. I'm just looking for where did those flips occur, where has the money stepped in, and I'm trading that now. Sorry, go on.
Sure.
Could you just mute your mic, please?
Eu achei que fosse sexta, mas tudo bem, é melhor que seja amanhã mesmo. Muito obrigado.
I think it's this telephone.
I don't know who that is. Can you see it? Anyway, so yeah.
Sorry guys, I think I interrupted you.
Yes, all right, no worries. So yeah, just to answer Roberto's question, I think he was asking would I use the premium? Yeah, there we go. So no, I wouldn't use it. But where the only time I was just thinking that's coming to my head where premium discount on the M1 can be useful is if you were trying to trade, excuse me, if you're trying to trade continuations further in the M1 leg. So as the M1 starts to kind of move away from your POI, sometimes you'll get a flip zone very far in the leg with prices really impulsive. And you may want to use premium discount then, but even then I would say I'm not a big fan of chasing continuations on the M1. If price comes into my M15 POI, if I kind of miss sort of first or second entry, I just leave it. Now you don't have to do that as well. You can move with price and continue to trade with the M1, but I've found that it's just not worth it personally. If I miss that initial move, I just wait for it to come to the next M15 POI. Generally, that will happen either within session or maybe even by, if I miss it in a London session, I'll probably get an entry in New York. If not, no problem, come back another day. But generally, I'm not that bothered about chasing price further on the M1 when it starts to kind of go away. I just leave it. The risk reward isn't there for me. Sometimes, yes, you can make a hell of a lot of R especially when it's really, really impulsive. So I don't want to put you off doing it. But I just find my personal style is I prefer to get in near the M15 POI. That's where my strike rate's highest, my risk rewards on my side. Management's really, really easy because if price pulls back, I'm all the way down here. It's not going to tag me out. Whereas if you're entering high up on the leg, you could get tagged in. It could run a little bit of profit, and then it could have a deep M15 pullback. So I went on a little bit of a tangent there, but yeah, in short, keep it simple for now and don't use premium discount on the M1. Let me just open up this TradingView link quickly just to check it. Based on your chart, Minesh, not really. So basically, if you guys have opened up the TradingView link, basically there's not really much of a reaction there. It's not a great zone. And also that the zone that you've drawn that demand zone on, yeah, there we go. You've got it up there. That is a weak low. So it's not a great level to draw a demand zone from, because you see where you've drawn the demand zone, that swing low didn't achieve anything. It's a what I call a substructure low. Basically that low didn't go on to break the high. It didn't do anything. So it's not really a good area of interest. Where I would look, okay, is if you were to draw where you've drawn the zone on that candle, if you look to the left, right, where price is reacting from, that's a valid demand zone to the left of that circle. Probably should have done it on my, yeah, there. So that is where there's a demand zone, right? Because that demand zone led to price breaking the price swing high. Yeah, that one there. And now price has come down, right? And then reacted from that demand zone. Hang on. I think if I just quickly share my screen, it will be.
Yeah, let me just stop.
Although I have no idea how I'm going to draw on Safari. That's the only thing. I'll tell you what, I'll just fire it up. Is that Bitcoin chart right now? Minesh? Let me just
yeah, it was. Yeah,
it was. Okay, perfect. Sweet. I'll just fire up the chart. It'll be a hell of a lot easier to explain.
I have the Bitcoin chart open right now, and there's like a zone. So if on my 15-minute the zone turns into a flip zone, I could possibly trade a continuation on 1 minute.
Are you looking to enter a trade right now? Is that what you're saying? Let me just share my screen 1 second.
I just try to trade into the discount zone. So like the POI under it.
Okay, can you guys all see my charts?
yeah.
Okay, cool. So what I was saying is, I think you had this zone drawn on here.
That's right,
Yeah. So basically, it's okay. Supply and demand zones are in the market everywhere, right? In its simplest, most definition, a demand zone is essentially a sell before the buy. Okay, so as long as the candle closes above where that sell candle was, right, this is technically a demand zone. But remember, the two things we look for to validate what a strong zone is one that leads to at least a break of structure or takes out another zone. Okay, so yes, technically this is a demand zone, but it's not great because it didn't really achieve anything, right? It didn't take out that high. So price comes down in, it reacts here. You see, that's where the reaction is, because price comes in, then there's a small reaction, right, and then it pushes down. Okay, so technically that there would be your flip zone. That is where demand flips to supply. It's just not great because this isn't really that significant to me, because this zone didn't really achieve anything. Okay, so the way I would kind of be looking to enter here, let's try and quickly analyze this and see what happens. So you see how this demand here, right, is a lot better because
there was a reaction.
Whoops. So when this zone here was created, what happened? It led to that move. It led to the break of that swing high. Obviously, it took out these internal highs as well. So that's a lot more significant, right? It's the extreme of this movement here that clearly led to a break of structure. Whereas when this zone occurred, right, it didn't do anything. It's what I call a weak low, right? Because it didn't take out the high. So what happens, right, is price comes down. We get our bearish change of character here because this is the most recent internal low, right? We have a movement up here. And then all of these candles, you see how they all break the prior candles high? So that's all part of the up move. So as we come into this level, right, if I was looking to short from here, the first thing I'll wait for is the change of character. Okay, boom, we've got that. But I haven't really seen any reaction, okay? Price has just moved straight down. So there's been no interaction between supply and demand. So when I'm looking for the flip, that is what I'm looking for, okay, and I haven't seen that. So all we have at this point is our chock, okay, the internal structure has switched bearish, that is perfect. Now, because there's been no flip zone here, right, we just had a straight movement down, you can look to enter, but where I would look to enter is on the extreme, okay, on that extreme, what I call the structure zone. It's just called a structure zone because it led to a break of structure. I couldn't think of a better name, so that's the easiest way to define it, okay? Now, in this case, obviously, price didn't come up to mitigate that. Okay, no problem. But what I do, right, is I look for where is the first sign that a reaction steps in? Where's the first time bullish momentum comes in? And it's here, okay? Price comes down, we get a bit of a reaction here, but the move kicks in here, and that's the reaction. Okay, so technically, this is the base of the reaction. This is quite a weird example because it's big and it's volatile and it's Bitcoin, so I guess that's what it does. But essentially, that is the base of the reaction. Now, if this demand zone here now is to do its job, right, as price comes into it, it should go on to make a higher high. It should break this high. If this demand zone, right, is to do its job, price reacts, it fails to take out this high, so it's failed to do its job. So the moment that price then closes below the reaction, which is this candle here, this exact candle, once it closes below that, that for me is now officially where the reaction has failed and demand has now flipped to supply. Okay, cool. We've had a flip, we've had a chock, we've had our higher time frame mitigation.
Would
but where actually, sorry,
would you enter on this buy to sell move now?
I'll have to look at the higher time frames, but let me just quickly finish explaining sort of the entry model, and then we can break it down. So the question is, okay, well, where did specifically that supply into the market? So this is how you can be very unrefined, but by definition, it's this entire box here is that supply, because you draw it from the base of the reaction. Okay, so from wherever the reaction starts, which is here, that's the reaction to the height of it. That is the buy to sell. Okay, so all in this buy to sell, right, between the high and the base of the reaction, that box is your supply zone. That is where supply came into the market to flip to demand. Okay, and that's what I call range supply. Okay, so if you watch the supply and demand zones lessons, you'll know we can have an entire range, or you can refine the range down to, say, a pivot, right, or a single candle, so on and so forth. Obviously, this is a big range. We'd want to refine it a little bit more in terms of risk to reward. So you can either leave it like that, and you can say you could enter on the EQ, right, to improve your risk to reward, or maybe you have, like the way in euro dollar, I have a rule where I need a fixed 2-pip stop loss, and that would just simply determine where I enter. So imagine on Bitcoin you had a fixed 100, is that dollars, a fixed $100 stop loss, then I would be entering here, right? But we can be, that's one way of doing it, or you can start to look for where did the actual supply into the market. And this is a really weird example just because it's so big. So what I would do is I would just kind of look to refine it a little bit more, and you kind of look within it. I don't really like this price action, to be honest with you. Like if this was FX, I wouldn't really know where to enter. I'd probably jump up a time frame to refine it a little bit. I mean, arguably this is where you can then use what I was saying is a bit of a rubbish zone, just to show where the interaction is, because yes, the zone didn't achieve anything, but we're not really trading the zone. We're just looking for where that last interaction of supply came in. This really isn't a great example. This is quite complex. So arguably here, but you see, but by me picking this zone, what I'm trying to do is I'm trying to refine this bigger zone just to see where that last interaction came in. But I wouldn't have a lot of confidence trading from this. It didn't sweep any liquidity. It's a very weak reaction. There's all of this above it. I wouldn't like it. But the thing is, this might be how Bitcoin moves. I haven't backtested crypto in depth. I'm basing this on my experiences in FX, and that wouldn't be a great move, but the logic is there. So what I would do, something like that, if there's a zone I'm not sure from, I would just set my alert there, wait for price to get back up into it, and then I would look to see if it's going to hold. I would then see price come down into my demand level. I would see it react. I would then see it fail. We then also got our chock there. Okay, let me draw on the line so you guys can see what I mean. So that would be my most recent internal low. Right, price comes up, makes a lower low, makes a high, and then we get the chock there. But this would be, again, our demand zone, because price comes down and reacts to it. Right, this demand zone caused that high, price comes down into demand, it reacts, it tries to do its job, it tries to take out the high, it fails to do so, supply then steps into the market. Okay, now we have a confirmation entry of that level we weren't sure about. Right, now the market has turned, it's in our favor. We have a change of character again, right? The M1 has now switched bearish. And now we have the flip where we can enter Ideally, we could cover the high as well. Sometimes that's great if you can do that. And that would be how I would do it. So if you have like a really big area that you know supply steps to the market, but you want to increase your risk rewards, then just outline, multiple different POIs that make sense to you. Like this would be another one I would like, because this is really complex price action. This is not a nice simple setup at all, by the way. So I'll probably show you guys some examples in FX just to so you're not feeling overwhelmed. But you see here, I'd be following the mitigations, and you're essentially just reading the 15-second on the M1 at this point. Okay, so you would see that price came down, mitigated supply came down. That was the last mitigation, and then we got the move down here. So that would be that's kind of what I would call the extreme of the larger M1 flip. And I'll be looking up here, and I'll just again, I don't really want to kind of go over this too much because this is quite complex price actually.
Yeah, I have another example. It occurs like right now. If my 15-minute supply like gets a flip zone, I have on the 15-minute chart there's like the hidden one, like on the most recent price. There's like a hidden supply and demand zone. Yeah, this one. If this one fails and gets like a flip zone, can I use this to like add a sell position there?
Yes, potentially. So a lot of times what you'll see in my markups, right, is I'll mark out zones like this. Okay, so this is a fractal refinement.
Never mind.
That's what I call.
It failed.
Sorry?
It
failed.
No.
So yeah, but wait. The reason why I mark these POIs on, if you ever see me mark a POI on like this, it doesn't necessarily mean I want to trade from it. It's me just outlining and telling myself that there is demand there in the market. It doesn't mean it's a good demand level that I want to get long from, right? Because it's probably high up in the leg. We're coming off higher time frame supply. I'm marking this out not because I want to get long from it. I'm marking it out to show me, all right, where supply may step into the market to help me look for a short entry. Okay, so what's happened? Yeah,
that's why I left it, because I want this to fail. So if this gets rejected and makes another high, the overall bias would be pretty messed up. So I want this to fail like it did right now. But
what does it also give you? It gives you potentially, I mean, I wouldn't necessarily like this area, but it potentially gives you an area to look for scalings, right? Because if you see a demand zone fail, brilliant. Now that tells you potentially where supply has just entered the market. But remember, to validate this, what do we need to see? We need to see a reaction. Now, this is a very, very rubbish reaction because price has pretty much come in and just melted straight through it. So that's not great. What would be a lot more ideal is if the price came in, had a decent bounce, and then pushed down, right? Because then you would have a demand to supply flip. That would be where supply came into the market. You look for price to come into it, and then that can be your POI to look to get short, okay? Now, that's not a great reaction, but there is a reaction there. It's a small one, but you see how price comes in, then it pushes up, and then it goes down.
Yeah,
okay? So the same way we have.
If you would use this one on the 1 minute, it's like a good move. It moved into a supply and demand area, like the top, the long wick there. I marked this up, and it moved like inside of this area and then failed. So I would mark up the buy to sell move and enter of this one.
Yeah, so technically you can enter anywhere here, but I would obviously probably refine that a little bit.
Yeah,
that's the extreme. That's the last mitigation. And yes, technically you could enter here. Now, this is not signals. I have not backtested crypto, and I don't really like this. I can't tell you with any confidence how this will play out, what edge this has, because I don't have the data to prove it.
Yeah, I get this every day, so I'm pretty used to it. So
yeah, I mean, I'm guessing with crypto, it's volatile. What I do like about it is it's come off a really great level, right? This daily zone, all the way up to the extreme 4-hour zone. Okay, we're following a series of mitigations, right? See how price broke structure, came up to the extreme supply zone, right? It didn't quite break structure, but it's a bit messy here, but it created another extreme supply zone, right? That was the last mitigation. Follow the mitigations along, price comes up into it, then it leads to the break of structure. Okay, this is your next level where money stepped into the market, prices pulled back up into there, it swept the liquidity behind this high, right? We've had a pretty solid reaction there on the M15. We've actually opened up the M15. I think we got a change of character. Yes, we did. So you see how price came up into supply. It had a little internal pullback. Then it took the high. See how it wicks the high here? What does that mean? It means we now have a low. That's our internal low. So that becomes my M15 chalk line. Okay. Once price then wicks that line, obviously we've got a break and close, which is nice as well. We now have a bearish change of character in the M15. So the M15 trend is bullish because this was the last swing break of structure. Okay. You can see how the M15 is bullish, moving all the way to the upside. we have a breaker structure. So currently we're trading within, this would be the swing high if I mark it out. Where's the swing low? It's the lowest point that led to the breaker structure. So I look back. Actually, it's good to go over this. I've had a lot of questions about this, right? If I'm looking for where's the lowest point that took out this high, it's the lowest point after this high was formed. So after this high was formed, right, from this point onwards, if you look to the right of this orange line, where is the lowest point after this high formed that went on to break it? Okay, so anywhere within this box, I want to find the lowest point. And that is the most mechanical way, right, in how you define where your swing low is. It's the lowest point that took out this high after the high formed, and it's here, okay? I know that's a little bit pedantic for some of you, but I know there's been a little bit of confusion around that. So currently the M15 for me, would be bullish, and it'd be trading between this swing high and this swing low. But remember, the 4-hour chart is bearish, okay? And we've just come into the extreme supply zone. So the 4-hour chart is trading between this swing high and this swing low down here. And we've come into an area that really has to hold if the 4-hour bearish trend is to continue. So that makes it a high probability area to look for shorts. Yes, you are trading against the M15 trend, but if this is going to continue, then the M15 is going to switch bearish anyway. Okay, there's no guarantee, but it becomes a good level for that. So what can we do? Well, we can wait for that supply zone to be mitigated. This gray box is a 4-hour supply zone. Okay, now the moment price gets into here, you can straight away jump down to the M1 and look for your M1 entry model. Or maybe, especially with this amount of momentum, you want to wait for a little bit more confirmation. So the next sort of bit of confirmation you can wait for is wait for the M15 internal structure to switch bearish, which is what has happened here, okay? So it's still bullish, the swing structure is still bullish because this is the swing range we're within, okay? It's a higher high, this is our higher low, but the internal structure has switched bearish. So prices come up, it's made a tiny little minor pullback, micro pullback, internal pullback, whatever you want to call it, right? It's a very small movement. It's then taken the high, which means this is a low. So remember for chalk, I'm happy to just look for wick breaks, but for breaks of structure, swing structure, I need to see a candle closure, okay? So that's happened, right? We've had a internal higher high, internal higher low, internal higher high. Price then takes out that internal higher low to make an internal lower low. So now the internal structure of the M15 has switched bearish, which gives us a bit more confirmation, right? That now the 4-hour POI is holding, and potentially we may be forming that 4-hour lower high and reversing, but we have to accept the risk that potentially it's just an M15 pullback down into demand. This M15 strong low is going to hold. Why is it a strong low? It's a strong low because it did its job. It took out a high. So at the moment, price could literally just pull back down into M15 demand and it could continue bullish. But we have to run with probabilities, right? And the probabilities is that the higher timeframes are stronger. The higher timeframes should take precedence over the lower timeframes. And the 4-hour is bearish. It's come into that supply zone. We've now had that bearish change of character in the M15, so we can look for shorts. But you may just want to partial a little bit of your profits as we come down to here, just in case the trend stays bullish, right, and we go up higher. But this is where you, as a trader, have to decide how much confluence do you need, how much confirmation do you need, before you're gonna, look to take a short. Because some of you may want to go, I'm only going to trade when the M15 switches bearish, and then you can wait for that breaker structure. Okay, boom, we get that breaker structure, mark out the new swing range you're within, wait for the price to pull back into it, right, and then you can take the short. Yeah, hopefully that makes sense in terms of all of that. And it looks like prices pull back into it, and that would have been a pretty tidy trade.
I entered on this. I entered because I have seen the flip zone, so I just like add another position.
You have to give me 10% of any profits you make on this trade.
Oh, for sure, for sure. Yeah, just give me your wallet. I will like give you 2K.
I don't want any of your losses though. It's all good, mate. No.
Yeah, no losses. Yeah, okay. You would be pretty break even then.
Yeah. I mean, yeah, the logic's there. This is something I'll have to test. It's quite low down in the leg. I would be very cautious that we could at any point start to pull back up to there before we come down. That's something you have to bear in mind. And this is why I personally don't like entering so late in the leg. But maybe Bitcoin might move slightly differently, right? Maybe when price mitigates a higher time frame POI and it's pro the 4-hour trend, maybe that's when you can do this, right? And you can enter a lot lower down in the leg.
Yeah,
obviously.
Most of the time, Bitcoin once it got like a momentum spike like we had before. Once it does this, you have a pretty high chance to get like the correction impulse, I call it, because in Bitcoin, it's very different. You get like, if you have one impulse, there is like a counter move on that. I've traded a lot of these. This is because why I am more successful with Bitcoin, because I know how it moves, and you can easily take the counter moves. Like,
are you saying that when you see an aggressive move like that, it usually retraces?
Yeah, and I trade this all the time, and like 9 from 10 trades were like in profit if I use this one. Like we did a move back there was a big impulse, a little bit more to the left. Yeah, if you another one left
on the M1 or
the on M15, the last push we had 2 impulses. Yeah, this one right there on the left, a little bit more.
Oh,
Yeah.
yeah.
That it's the same there. We got a little impulse, and we got the correction back into the zone. So
yeah,
this is like the most I trade. I use the counter momentum trade. I call it.
Yeah. Okay.
And
So you like trading that reversal. I mean, as long as it works, right? Like the logic's there, right? It's about understanding. I mean, I talk about this in lessons, but essentially what we're doing with technical analysis is trying to read the order flow, right? We're trying to read the orders on the book. We're trying to read where are buyers and the sellers exchanging those orders. Where is that battle occurring? Would you see the reaction? And then who wins that battle? Here we saw price come down into this demand zone. It reacted. It showed us that there was buying interest there. That is key. But then what happened? Supply was way stronger. It overpowered it, right? Pushed price down, and then price came back up in to mitigate those remaining orders that were not previously filled, because there will be supply that is left there in the market. Price comes back up to seek that liquidity, okay, because it's run out of orders, right? So price comes back in to fill up more supply up here, and then boom, ideally we get the move. But like I said, right, it's not the most amazing area of, it's not most well priced to be entering, right? I'd rather be entering up here if price was to pull back up into this zone, and then we go. So you may want to be a bit more, see, this is what happens a lot, right? And this is why I don't like entering late in the move. Now this could still play out, but this is, if it doesn't, this is an example why I don't like doing it. But yeah, the logic's there, okay? So it's just about understanding that and then building a system around that, testing it. So yeah.
Yeah.
Any more questions about that?
Oh no, thanks. This helped me a lot. Thank you very much.
No problem at all. Don't think there's. Can you?
Matt?
Yeah. Hello.
It's Pacino. Can I ask you a question about Euro USD?
Yeah, sure. Let's hop onto it.
May I share my screen?
Yeah, of course. 2 seconds. Go for it. Hopefully it should work.
You guys see me?
Yeah. Ah, is it Bettino?
Yeah.
Hey Bettino, man, how's it going?
I'm fine.
Yeah. Good man. Good man.
Picking on the wounds, but I'm getting there.
You'll be good, mate. You'll be good, mate.
So as you see here, I have 1, 2, 3, 4 POIs that are marked on the M15, but this is the 4-hour chart.
Yeah.
What I'm looking for on this trade idea is to enter on the mitigation of the 4-hour after it comes back when it broke the structure, to go long around somewhere around here or here. So my question is, following up on what you just said, as this is the lowest point on the 4-hour chart, this is the one that I should be considering to watch a 15 minutes choke, or do you think these ones that should come before that could be a flipping point?
So what I find, or have found in my testing with euro dollar, is the first initial trend change. Let's say on the 4-hour chart, right? So this is 4-hour chart was bearish for a long time. We've now had a swing breaker structure to the upside, right? That's what we saw recently. That first initial trend change, usually, not always, but more times than not, price does not tend to pull back that deep on euro dollar. So euro dollar, after that first initial trend change, most of the times does not pull back down towards the extreme. It might pull down towards the EQ or some discount pricing, but generally I found it won't come back to the extreme. Now, in this case, because it is heavily counter to the daily and weekly trend, right? We're very bearish on those timeframes. Potentially, in this case, right, it might pull back deeper because it's when it's very counter to the higher time frame trend, right? We get more of those corrective moves, right, with deeper pullbacks, right? But yeah, you can see here, it looks like based on your drawing, we've tapped into the EQ of that 4-hour range. We've tapped it, which means we've hit.
It has touched the zone quite a few times for now, and it reacted from that. What I assume is that it's engineering liquidity or something like that. Then to break it down again, mitigate the real point, and then go up again. And so that's my real. So this would be the first point within the discount area. This one would be the first point of the inside the discount area to buy. So considering your experience, when we reach this area, the safer move would be wait for an M15 choke and then look for an entry.
Yes. Yeah. I mean, that's always kind of the safest option. Is to wait for. Well, it's not the safest option, but it's a safer option than just trading. Obviously, the first M1 entry. Ideally, right, price would mitigate a 4-hour POI for that 4-hour high low to form, but obviously we know that it doesn't have to. It could just be that M15 zone. Now, it's hard for me to say exactly what I would do personally when price hits that zone, because for me, I like to use a little bit of discretion with whether I will trade an M1 chock or whether I will wait for an M15 chock. What I found for me personally is I like to have a little bit of freedom there just to see what the overall story looks like. I'm happy to have that discretion because it can look very different on a case-by-case basis. What all of the higher timeframes look like, what did that zone achieve? How much momentum is price coming into the zone? What's the risk? All of these things, right? So I personally am happy to use discretion. Now, for anyone who isn't consistent or for anyone who isn't new, my advice will always be just have a strict rule that you just always stick to no matter what, because it just keeps things simple. It keeps your emotions very, very low. And it will, I promise you, it will help to boost your performance. Now, there will be some times where you might miss trades, and that might be frustrating because you may be waiting for an M15 bullish change of character, and it might just give an M1 change of character, and then it might, have quite a big movement. Okay, but that's fine because you just have to remember that over the long run, waiting for that M15 change of character will probably save you from a lot of losses, where price may come down into that M15 zone. You may trade the first M1 change of character entry, and you could trade a few losses before the real move goes. And that's where waiting for that M15 change of character will always be the safer option, okay? So that would be my advice. Come up with a rule like that. I've posted it in the Discord a few times where you would have a very simple 3-line rule in your plan where it would say something like, if it's an M15 zone, wait for an M1 change of character. If it's a 4-hour zone, you wait for an M15 change of character, right? Because it's quite a big zone, so you want to wait for the M15, at least to change in your favor. Now, if it's a 15-minute zone nested within a 4-hour zone, that's a lot more confident. So maybe you can just go with an M1 change of character, right? Because you're being a bit more accurate. So I like this. Which one?
This whole scenario that I just draw, we have a potential 4-hour POI.
Well, is the first 15-minute one you showed me? Is it in a 4-hour? It doesn't look like. Is it the one that's?
No, it's the last one.
Oh, the one at the bottom.
Yes.
Yeah.
This
so
is this is the very last one. This is the 4-hour POI, which is a very big area, so very risky entry. And then this would be the 15 POI inside the 4-hour.
Yeah. So if price hits that, that's your extreme 4-hour demand. So it's really the level that has to hold if the 4-hour is going to stay bullish. So that's a really good tick in the box. You found a refined M15 zone within there. So when price comes into that, that is where I think it's okay to just wait for an M1 change of character. But again, you don't have to. If price comes down there with a lot of momentum, right, you're playing within a massive 4-hour range. So waiting for an M15 change of character, it's not really going to, you're not going to lose that much risk to reward because price isn't just going to tap into that zone and go up in one big movement. It's probably going to tap in and mess around for a day or two, maybe in a session, right? And there's going to be plenty of entries. So if you're not sure, if you're ever doubtful, just wait for an M15 change of character, and it will probably save you from a lot of losses.
And as
But you
we
don't
have
have
seen here in this point right here, more
Yeah.
often than not, the M15 comes back to this initial move to go back
Exactly.
again, right?
Yeah, so I don't know if you
longer, but
sorry, go on.
it may take a little bit longer, but it's a confirmation, right?
Yeah, so a good example was London session today. I don't know if you had a chance to see it, because I know you're in the Eastern time zone, but price came down during the London session into that M15 POI, and I had a few questions in the Discord. Is will you wait for an M15 change of character, or will you take an M1 entry? Now that M15 POI where you have your mouse was also a 4-hour zone as well. So it was, I believe it was a 4-hour zone. Let me just quickly check. Yeah, it was. It was an M15 and a 4-hour zone. Right, price came into it. It was pro the 4-hour trend. It was against M15, but I was happy to just take that first M1 entry that came in, and it was a loser. I knew it was aggressive. I knew it was fighting momentum. I knew there hadn't been any liquidity and there'd been no liquidity swept, but I was happy to take it. I took the loss. Price stopped me out, and then it gave another M1 entry within there. But because that was the second entry, it had a big build of liquidity and swept it. I was happy to take it. I was happy to accept the risk, and the move played out. And then I got a question from someone who said, "Oh, I was waiting for the M15 change of character, and now price has gone without me." And I kind of got the impression that maybe, they were frustrated and they were getting FOMO, that waiting for that confirmation meant they missed a trade. But just like the point you made, Patino, if you just wait, even a few hours later on in that session, or maybe New York session, or maybe even the next day, price is going to have made a new M15 range, and it's going to pull back to where that demand stepped in from where I initially entered, and that happened during New York. It came all the way back down. Now in this case,
we're talking here about the 4-hour chart, so we can wait, because if this goes back with this choke, it will probably go much, much, much higher. So it will not be a problem to wait for that long.
Yeah. There's no need for FOMO. So again, if I could keep it very simple, if you want your strike rate as high as possible, and you're just starting out, I would always wait for an M15 change of character, in kind of those larger zones, or when price is moving impulsively. But I'm personally quite happy to hit an M1 change of character a lot of the time. So yeah, if anyone's listening here and you just want some rules to start with, I would recommend watching the putting it all together. There's two videos in that module at the end of the technical analysis lesson, and I write in the notes below there some rules that you can use. So, i.e., when price hits an M15 zone, you can wait for an M1 shock. If it hits a 4-hour zone, wait for an M15 shock. And if it hits an M15 within a 4-hour, you can just take an M1 shock. And that's just some simple rules to get you going, to keep it super mechanical. But just like today, if you wait for the M15 shock and it doesn't initially give you an entry, don't get FOMO, don't get frustrated, because just be patient. I guarantee you'll get another entry soon enough. But you're saving yourself from potentially taking some losses until you gain some more experience in the market, where then, like the way I do, I'm happy to be, I use my gut feel. I do use discretion in those case-by-case basis, but I'm a massive advocate, as you guys know, of keeping it as mechanical as possible. And that is how you build very simple mechanical rules around it. You just have to be disciplined to stick to them. I realize you may miss. Anyway, I'm ranting about the same things, but hopefully that makes sense.
Being there, done that quite a few times.
Sorry, was that a question?
Yes, I would like to show my screen to you if that's possible.
Yeah, sure. There we go.
Yeah, I'll show my screen right now. So right here. So today, right, when I woke up, price was around this range.
Yeah.
And I was looking for any 15-minute POI for price to come to. And when I looked at it, I found some couple few. Like I found this one, but it didn't work out. So
let's talk about that one straight away. That for me wouldn't be an M15. Is that an M15 POI? Yeah, it's not that. For me,
like I found it on the 5 minutes more like.
Okay, yeah. So, so the thing here, right, is at that point for me. So I can see with your swing structure, for you at that point, the M15 was bullish, right?
Yeah.
So it's not as bad, but for me, the M15 at that point was bearish. Okay, I had it in a bearish swing range. And price had just come off that M15 supply zone, the extreme supply zone for me, and it was bearish. And that for me wouldn't then be a high probability area to get long, because you're trading against obviously all that momentum. You're trading against the M15 bearish trend. It's in kind of the middle of the leg and it's not an M15 POI, it's just an M5 POI. So that for me, it wouldn't meet my plan. It wouldn't be high probability at all. Does that kind of make sense? I mean, for you, it's a little bit better because you have your swing structure that way, and that's fine. That your swing structure is valid as long as you always are quite tight. Because I think that was about that move around 6 a.m. where you've drawn swing structure to the left, around 6 a.m. Keep going more to the left. You see where you've drawn that bearish M15 boss.
Yeah.
That for me, that's not swing structure because I think it was like a 12 or 13 pip pullback. That move there, where you, so for me, if you measure it, so that's what I always do. Always measure it. See there? It's only about 12 pips.
That doesn't have to be 15, right?
For me, I like to see at least 15 or more.
15 or more. Okay, then. Oh,
yeah.
Okay.
But that's fine. Honestly, if you see swing structure like that, it's fine. You just have to be consistent. It means maybe your rule is 10 pips, and that's fine. But just make sure you always use 10 pips, okay? So that's fine. So let's say that's the way you use swing structure. That's cool. But again, yes, you would be getting long with the trend, but price has come off M15 supply with a lot of momentum. It's had a bearish change of character off that supply. But the major thing would be is that POI is not great. It's a 5-minute POI. But yeah, it's not. I would stick to kind of
the 15-minute POI.
Yeah, stick to the 15 POI. I mean, there's one just below that. That's those sell to buy wicks that you haven't drawn on. Yeah, and that's not amazing. But the reason why I would have preferred that one is because those sell to buy wicks are reacting to the buy to sell range to the left. It's hard for me to explain without drawing, but do you see the buy to sell range to the left? That whole like M15 range to the left. No, if you go up with your mouse, yeah, you see all of those candles there. If you were to go on like that whole, it's a buy to sell range, right? It'd be like on the 1 hour. So so it's not very refined, but that's essentially that whole area is a supply zone. So then if you look back at the bullish swing leg you were looking at, where the POI is, see how price moves up into it. It then comes down, it reacts, and then it pushes up. Yeah,
more like a failed reaction. Yeah,
that's what makes it a little bit better. It's not amazing, but it's a little bit better, and at least you can see that on the M15. So that would be, so I would mark that out. And if price came into there and give you like a really nice M1 entry, that's more in the discount. I would prefer that compared to the one that you've taken, just because it's kind of an M5 zone, more in the middle of kind of no man's land. So it's not.
Then which time frame is the best to find POIs? Is it 4 hours? Because I know that 4 hours is quite good, but is 15 minutes, 5 minutes good as well, or just 15 minutes good?
For me, 4 hour and M15. If I could only have 2 time frames, that for the rest of my life, they would be the 2 time frames. You can
2 time frames,
those 2 time frames are king for me, because the 4 hour chart gives you everything you need to know about the higher time frames, like the longer term direction, and the M15 gives you your intraday directional bias. It's quick enough to give you good intraday bias. Just from my testing, I've tried the 1 hour, I've tried the 5 minute for structure. I've tried everything. 4 hour and M15 is like the sweet spot for me. So in terms of POIs, obviously price is not going to be moving to 4 hour POIs that quickly. So I'm happy. The simplest way I could explain my trade plan to someone is I trade M15 POIs with M1 entries. That's the simplest way I could explain it. So when you see those M5 POIs in the middle, get rid of them now, and I guarantee you your results will improve a lot. Yeah, you might miss some trades here and there, but don't worry about it. Stick to those clear M15 POIs, and you'll find things a lot easier, hopefully.
Yeah. Quick question. One more question. This is 1 minute. So like today, I took some couple trades, right? So since I took a 1% loss here, I kind of moved on to here, which is the order block. Right.
Okay, so straight away, you see how price has spiked through the zone.
Spiked through the zone,
yeah. Instantly, that means the zone has failed. I'm no longer interested.
Oh, it's failed, right?
Yeah, the moment price spikes through a zone, that for me has invalidated the zone. So it means, because if a demand or supply zone has done its job, price should not break that zone even by 1 micro pip. Okay, like it should not break the zone. Now the caveat to that, what can happen is price can spike through that demand zone, right? But what it is doing is it's sweeping a swing low, it's grabbing the liquidity, and then it can have a bullish move. Okay, so if you're happy to trade that, you know, that is some good confluence and that can happen. But you see how prices come down and it's just smashed straight through that M15, it spiked through it. Yes, you could get it could be a sweep of liquidity and you could have a bullish move from there. But I have found when that happens, it's not a good idea. Just leave it. Just as soon as that happened today, my trading day was done. I was like, that's it. I come back to London now. The moment I saw that, because demand had failed. There was nowhere I wanted to look for shorts. I'm not going to look for longs in that area. It starts chopping around. I'm done. Because it failed to close below the M15 low. So we didn't get another lower low. At that point, I just see that we're in a range because we're breaking lows and retracing. We broke the high and retraced. That's when I just walk away. But to give you a shorter answer, yeah, for me, the moment a zone is spiked through by even a micro pip, that zone for me has been invalidated. It didn't work.
That's very good. Thank you very much, sir.
Yeah, you're welcome, man.
Can I take over now, Matt? If that's possible.
Yeah, sure, mate. Yeah, sure. Ask as many questions as you guys want.
Okay, thank you.
I think Dom has to stop sharing though if you want to share your screen.
Can you see my screen?
Not yet. It's loading now, I think. There we go. Yeah, I can see it now.
Yeah. So, like you guys were saying, this is not like a this is not a bullish breakout structure for you for like 15 minutes. But
No,
to others, this is okay. But to others, this is like a 15-minute breakout structure.
Yeah.
Okay.
Wait.
So
Did you say, sorry, say that again. Just you cracked
like
up.
because recently I just saw Dom just take over the screen sharing, and obviously he used this area as a breakout structure. But you said for you it wouldn't be a breakout structure just because this was not more than 15 pips.
Yeah, correct.
Okay, so normally he would be looking for his entry around his point of interest, which would be around here, roughly. Obviously, like I can see bear wicks coming out of the demand zone, so that would be invalid, or would this still be valid?
No, so I was looking to get long from that M15 demand zone today, because for me, although it was against the M15 trend for me, but anyway, forget about that. I was looking for longs from potentially from that demand zone, but you see the moment price came straight down and it just spiked through the zone, it's failed. It hasn't. It's not worked. It's not done its job. So I'm not interested in looking for longs at that point. Because there's no area of interest for me to look to buy. Okay. So the moment price spikes through, it's game over for that zone. Now, the only, like I was trying to say, I'll just say again, the only thing that can happen in that circumstance is price could just be sweeping the structural swing low to grab liquidity, right? Because I've seen this happen a few times, and then you can get a decent move. But in this case, that wasn't really what was happening, because the M15 was bearish, the 4 hours bullish, the demand zone had failed. It was just a mess. It wasn't in an area in which I want to be doing it. So to keep it simple, the moment that zone failed, that's it, game over.
Okay, makes sense. And you know how these candles did not close, because I trade I think type 2 mapping or something. So normally I'll wait for a closure below candles for my change of character. So just in case like anyone was to look for a long position here, obviously when they go on M1 time frame, they don't see no like couch. They'll wait for like an M15 couch. Obviously, because a candle did not close below this wick low, I wouldn't be looking to get entry on unless it closes below this. Is that more valid? Would that be more valid to not take a trade from like? Would it be more valid to take a trade from here rather than taking a trade from here, just because like these candles did not close below this wick?
Yeah, so because I think you use the same mapping as me. So for a swing breaker structure, right? Because that's your swing low to the left. You scroll to the left a little bit. If that's the swing low, right? So to the left, I would need to see the candle close below that low, below the line you drawn, for there to be a swing breaker structure. Trying to think which way you had price mapped. You had prices bullish at this point, right?
No, I didn't have price as bullish at this moment, but I was looking to take a bullish entry from here to see that if it was respecting the demand zone around here. But obviously, because when I looked in the M1, I didn't really see a couch, so I was thinking, cool, this candle might close below this, and when it closes below this, it might like if this candle closes below this wick here, then it will give me like a actual couch setup for the M15. So
I know what you mean.
like,
Okay,
break the high then. But at this moment, because it didn't close below this, I'm thinking this will be my next interest, and this will be my next area. Like I'm waiting for it to break before I look for a trade for an upward.
Yeah, I see what you mean. Okay, so when you're saying couch, I think, do you mean chalk?
Yeah.
What I call chalk. Yeah. Yeah. So for chalk, do you use candle closures as well, or do you use wick breaks?
I use candle closure.
Okay, yeah. So I understand what you're saying now. So that would be then, yes, that would be your chalk line that you've drawn. Yeah, you would be waiting for that high, for the candle to close above that current line you've drawn, for there to be a bullish change of character. Yeah, that makes sense. Yeah.
Yeah, that's fine.
Yeah.
Okay, that's it. Thank you.
Yeah, no worries, man. But yeah, I mean, my main tip for you guys in terms of that setup today, I was looking for a potential long entry from that zone, but yeah, the moment price spiked through, I wasn't really that interested. But like you said, if price had to come down, broken that level, right, but then moved up and given you a bullish change of character, then potentially, then it might have got a bit more interesting. There might have been a long entry there, but yeah, there wasn't one in the end. So yeah, hopefully we'll get some cleaner setups tomorrow.
Okay, that's fine.
No problem.
Yeah, you can take over the screen now if you want. Yeah.
Okay, cool. Let me just check the chat box. Okay, I've got a few coming through now. So can you talk about, I'll try and go in chronological order. So can you talk about how you find your POI on the M15? That was you, Hosbert. Do you want me to go over that? I can go.
Yeah.
Okay, let me share my screen. Cool. So anyway, so how do I find M15 POIs? Very, very simply, supply and demand zones. I don't know, I've got this crap drawn everywhere, but supply and demand zones are everywhere, right? In the most basic format, a demand zone is essentially a sell candle right before the buy that gets enclosed. So that would be your demand zone here. However, there's these zones are everywhere, right? So what we want to do is we don't want to trade every single zone. We want to try and find the ones that are strong. Okay, so what are the two main things that we use to validate strong zones? One, the main one, right, we want to see is a break of structure. Did that zone lead to a break of structure? The second thing that I use to validate a strong zone is, did it take out another zone, right? So that's what I call a flip. So that's why I have two types of zones. One I call a structure zone because it leads to a break of structure. Another one is a flip zone, and it's just a zone that takes out another zone. Okay, they're the two things I do. Now, so very, very simply, let's look at structure zone. So structure zone, okay, we have this move up here that leads to what? It leads to a break of structure, right? It takes out this swing low. So what I want to do is I want to look back in this leg and go, where are their supply zones? Okay, so we have the one at the top. We have this buy before the sell, right? That's my extreme, what I call the extreme supply zone that led to a break of structure. And then we have this here, okay, because we have the buy before the sell. So that's two zones that I would look at, that are structure zones. Now, another thing that we can do is look for flip zones, okay? What did they take out other zones? So the key thing to kind of quickly see, was it a flip zone, is look for, did it react to anything? Okay, so what do I mean by that? Well, you see how price comes down and then it moved up and it reacted, and then supply came in. That tells me, okay, it must have reacted to demand somewhere. So what do? Well, I look at where the reaction started and I look left and I go, okay, well, what did it react to? And there is these sell to buy wicks here. Okay, it's not great, it's not amazing, it's not clean. I'd like to see a much cleaner demand zone. Did it react to the top of that wick? No, like that for me is a much cleaner demand zone, right? It's a nice sell before the buy that leads to a break of structure. But this for me is valid. Okay, sell to buy wicks. Now, for anyone who doesn't know, who hasn't watched the lessons yet, sell to buy wicks is essentially a bearish candle on a lower time frame, right? Because what happens is price moves up, it pulls back on a lower time frame, right? That would be a lower time frame pullback, and then it moves up. Okay, and that's where demand steps into the market, right? The price pulls back and then demand steps in. So that's what we're reading with these sell to buy wicks on a lower time frame. So price came down, it reacted, that reaction validates that this is a demand level, that it is a decent level, that there are buy orders in there. The price fails to break the high, it fails to make a higher high, right? So it fails, demand fails to do its job because demand should make highs. It fails to do that. So then what happens? Supply steps in, overpowers demand, and demand has now flipped to supply, right? So technically you could actually take the entire buy to sell range, right, from the base of the reaction to the top, and that's your range POI. But in this case, I've just refined it to the single candle, which we call a pivot supply zone. Okay, yeah, and that's essentially the two types of zones, right? Ones that lead to breaks of structure, and ones that flip zones. And ideally, I want to see one that does both because that's going to be the highest probability. Now there is a third confluence I look for, and it's called a sweep zone. And very simply, it just means that price swept liquidity when it was created. So, you know, arguably this is a sweep zone because it sweeps the liquidity behind this high and it leads to the break of structure. But I don't want to talk about those too much right now because it's not a major thing. We can talk about that at a later date. Now, your question was specifically, was it how do I kind of find the ones that I'm interested in trading from?
Yeah,
kind of more what you're getting at. Okay, so that would be more of a question of you know, how do you validate you know, the best ones to be trading from? How do you refine them? There's no easy answer to that. I don't know if you saw kind of the post I put in. Discord's getting pretty busy now, but I wrote this kind of big long answer to someone about kind of how you refine to the best POIs. And what I did is I created a lesson in the putting it together section of the technical analysis module. There's 2 lessons in there at the very end of the TA module, and in there under both of those, I've written the notes in there, and it's how to refine. How to basically pick and validate the best POIs, and it's basically based on all of the confluence we use. So it's painting the whole hard time frame story. Are we trading, you know, with the 4-hour trend and the M15 trend? Is it in the premium and discount of the leg? Are we buying in the discount of the 4-hour leg? Is it also in the discount of the M15 leg? Did it lead to a break of structure? Is it also a flip zone? Did it sweep liquidity when it was created? Does it have inducement in front of it? You know, all of these things. You know, there's a lot to it. So essentially, they're all the questions I'm asking myself to find me the best, highest probability POIs to trade from. But what you'll probably see, and what might be a little bit confusing, when I post my markups, you'll probably see that I draw in a lot of zones. I almost draw on sort of every POI there is.
Yeah.
And a lot of the times you might be thinking, well, that one's not the most highest probability. And that's because I draw on a lot of POIs that I'm personally happy to trade a reaction from. Okay, so kind of what I mean by that is, you know how I was saying at the start is that there are supply and demand zones everywhere in the market.
Yeah.
But we want to stick to the highest probability ones that, you know, lead to breaks of structure, blah 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 blah. Well, I know that those zones that are just kind of random supply and demand zones, they didn't really do anything. A lot of times price will give a reaction from them. So let's say you know, I'm trying to find an example. But anyway, let's just say that this was a rubbish zone, right? Let's say it didn't need to break a structure, whatever. I would have it drawn on because what might happen is price might come into it, and then intraday it might give like a 20 pip pullback. But if I'm entering on the M1 with a 2 pip stop, that's going to give me you know, 5R, right? I think, or whatever the map is, 10R on that. So I'm kind of happy to be a little bit more aggressive, but at the same time, I already know in the back of my mind, like I'm saying to myself when price gets into there, it's not a great POI, it didn't really do anything. So I'm only going to trade it if I get, you know, really clean price action. To be honest with you, it's kind of me being a little bit more advanced and discretionary. But if you're struggling with kind of picking the good POIs that are really going to hold, just keep it very simple. Like stick to the ones that are within 4-hour zones, or the clear ones, like these ones at the extreme of the range that led to breaks of structure, that led to flips. And don't be looking at, like, you know, what we were just discussing, where we are within the middle of this M15 range, and say we're kind of looking at like these sell to buy wicks, which look, it provides a little bit of a reaction, but you're not really buying anywhere good. Because for me, I had it mapped this way, where this was the M15 swing high, this was my swing low, we pulled back up into premium supply, we then had a change of character, right? Because we took this low took the high, so we'd had a bearish change of character from the extreme supply. So what that means is, if the M15 is going to stay bearish, it was very likely we were going to go on to form a lower low, because this here is a weak low. Why is it a weak low? It's a weak low because it failed to take out the high. So I in my markup, right, would draw on this demand zone, and I'd be aware of it. I would be aware it's there, but I know in my head that when price gets to here, it's very unlikely I'm going to be looking for an entry. It's more just like I'm going to keep an eye on it, because what could happen, if I bring price back a little bit, is, you know, price potentially on M15 could have come in a little bit like this, and then it could have given us a nice little change of character with like a sharp V-shaped reaction. And then I'd maybe sit up in my chair a little bit and go, okay, well, what's happened? Well, we've come into this 4-hour POI here. The M15 is still bearish, but we had, a decent minor break of structure. We've pulled back down into this POI here. We've now had a bullish change of character here. So then I would draw on that next M15 POI. I'd look for price to come in and then potentially look for an entry and anticipate that that move was going to happen, that the 4-hour POI was going to hold and the M15 was going to switch bullish and break this high. So I appreciate this might be a little bit confusing, but essentially I'm kind of drawing on these not so great POIs just in case something develops from there and I start to see something a lot more higher probability develop. The other reason why I will draw on these kind of reasonably random and not high probability zones is because it might tell me where supply has entered the market. So what do I mean by that? Well, if price comes in, it reacts and then it pushes down, we get another break of structure. Okay, we're now playing within this swing range. I'm going to ask myself, well, where do I want to look to catch that next lower high from? And I'll look back and I go, well, there was a flip zone there, right? And then we have the extreme zone up here. And now I have this POI and I have this POI to look for. Okay, and those become high probability because those both led to breaks of structure. They both took out this low. That one was a flip zone, and this one was an extreme zone that swept the liquidity behind that high. Okay, so this is kind of another reason why I would kind of draw on those kind of semi-random looking zones. Is it's just to help me paint the picture as price develops. I then go, okay, that took out that zone. We now have a flip zone, and then I would move this over here. Now we've had a break of structure, and then coming into like the next session, I would be looking for price to come into here. Work to see if I get my M1 entry model and look for a short, and then I would also have this zone up here, right? So does that kind of make sense?
Yeah, it makes a lot of sense now. Yeah,
okay,
makes sense.
And one more question as well. Normally, like for example, when price breaks, like when the M15 breaks a prior high and it becomes like bullish. For example, this whole leg. Like normally we would expect price to come to a point of interest around here or anywhere here, and then obviously continue. So when it's coming down, when it's coming down, like some people take the trade for it to come down. Obviously they'll look at the M1 like character and then look for the trade to come down.
Yeah.
Like, would you like? Do you think it's very wise to like look for a trade to coming down, or just wait for like your point of interest and just wait there and just look for your long position?
The easiest and simplest answer to give you is always trade pro trend. Okay, so in that case, yes, just be patient. Wait for let's say you were looking at this POI, right? Wait for price to come into here and look for the long. That's the most simplest answer I can give you to ensure that you have the highest strike rate. But you don't have to do that if you're happy to trade counter trend. If you're happy to trade this short, which I'm happy to play these moves from here down to here. Then yeah, but you want to pair it with confidence. Okay, so at this point, let's do some kind of quick multi-time frame analysis. Well, what has happened to potentially play this move? Well, we've tapped into this daily supply zone. So let me quickly show you it. It's getting messy, but we tapped into this daily supply zone here, which actually was a flip. I don't have it drawn on, but there was. You just have to. Whoops. Hang on, bear with me. Just have to believe me, but there was a daily demand zone here. Price came into it, it reacted, and then supply stepped in. Okay, so that's the decent daily flip zone. Okay, so that's a decent area to potentially look for shorts from. But what do we have to think about? Well, it's very, very low down in the daily leg, okay, because this is the daily swing low and this is the daily swing high. We've had a bullish reaction off of daily demand, which is also weekly demand. So yes, we could look to short from here, but it's very low in the leg. So we have to be aware that potentially any reaction from this daily supply zone, right, could just be to fuel liquidity to have that pull back up into premium before we go, okay? And it's quite a big zone, but yes, there is logic there to look for a short. So then we drop down to the 4-hour chart. Can we refine that big daily zone down to a 4-hour zone just to help us increase the accuracy? Well, if we look left, there's no 4-hour zone there, okay? So there's nothing on a 4-hour to help us. So that's not really a great sign to look for shorts, okay? Let me mark out the top of this candle to see if it rejected anything. Look left, nothing really there, right? These buy to sell wicks essentially. So supply on a lower time frame, but there's nothing major there. So straight away, the only thing really from the higher time frames I have to back up playing the short move is a huge daily zone. That is not, for me personally, that's not enough accuracy to want to trade counter trend at that point. Because at this point, if I was shorting here, I'm against the M15 and the 4-hour chart, and we haven't mitigated anything to give me accuracy other than a huge 100 pip zone. So in this instance, I wouldn't look for the short. The only other thing that I would be doing, let's say that we had come into a decent zone, right? Let's say an M15 zone, is you could go, okay, well, I'm going to wait for a change of character because we've had a bullish break of structure, right? When we took out this high. So what do we expect after a break of structure? We expect a pullback. How do we know when the pullback started? We look for a change of character. So where would the change of character line, be? It would be this low here, okay? Because price came up, it had an internal pullback, and then all of these candles broke the prior candle's high. So for me personally, I would need to see this inside bar be wicked for a bearish change of character, right? So at that point, okay, we've pulled back, we've had a bearish change of character, we're mitigating daily supply. That is where then you could potentially look for counter trend shorts, okay? Not saying you necessarily would in this specific example, but they're the kinds of things I would look for if I wanted to trade counter trend. In this very specific example, no, because you're trading, the M15 is still bullish, the 4 hour is still bullish, and we haven't come into a refined area of supply to back that up. So I would rather be patient and I would look for longs from here. But I would also be hesitant on the longs as well because of where we are, because we're in daily supply. I would still look for longs, and if we got the entry model, I would hit it because I'm reasonably aggressive, that's fine. But I wouldn't be surprised that we then switch bearish. But now that we've had that bearish break of structure, okay, daily supply is probably playing out. Now we're within the new swing range and now we can look for short trades. I know, again, I've gone on a bit of a long rant there compared to your specific question, but yeah, keep it simple. I would say another really way of keeping it simple as well is just always trade with the M15 trend. Just always look for pro M15 entries. That might be something that, so like, let's say for the next few days for this week, right? My sort of view, or very simple view, because I know the higher time frames are a little bit confusing at the moment because there's a lot of, the daily's bearish, the 4 hours bullish, the M15 trend is changing a lot at the moment. So it's confusing, but it's like that because when you have such a big sustained higher time frame move like this, okay, right? When the daily and weekly, if they're going to pull back, right, it's going to be quite complex. You're going to have a complex pullback where it's corrected. So although that looks very simple in the daily chart, where it's just one nice little pullback, you get these big swings, and this is where the 4 hour and the M15 can be changing trend quite a lot. And also, we don't know yet at this point, is this daily supply going to hold and we're just going to go, right? So the 4 hour only switched bullish just to mitigate daily supply, and then we're going to continue down. Or actually, is this quite significant that we've had that bullish trend change? And actually, we are now going to have this longer term move. I don't know. No one knows. And we don't need to know. So this is why I try and preach as best as we can to try and make things so mechanical so that we just keep it simple. And that's why I try and have those rules like, okay, on the 4 hour chart on euro dollar, if price pulls back, right, more than 40 pips, okay, in this case it does, right? So I'm just going to call that swing structure, even though to me it doesn't really look like swing structure. To my naked eye, right, you get a move like that, okay? And this is just a pullback. The 4 hour would still be bearish, and that's what I would be expecting. But this is why I bring in the rules: be mechanical, be consistent. The 4 hours bullish for me. So what am I expecting? I'm expecting a 4 hour high low, and I'm going to run with that assumption until it changes. Okay, so what I mean by that is I am expecting, no matter what, I'm expecting a 4 hour high low to form until that low breaks. And if it does, it's fine. I was wrong. It doesn't matter because I'm just sticking to that mechanical rule, and it really helps with the training. Okay, so the 4 hours bullish. So for the rest of this week, or until it stays in this range, right, I'm looking for a high low. I was looking at from today from here. We haven't quite, looks like we haven't spiked it yet. You see how it hasn't even spiked it by a pip yet.
Yeah.
That to me, it's still valid. As long as we stay in it, we can still go from here. Right, you can have a couple mitigations before we go, right? But if we start to move down, then yeah, this next range would be where I'm looking forward to for the high low. Of course, you can refine it, so on and so forth, but that would be the next key range. Now, again, we do not have to touch this, right? If we push lower tomorrow, don't think, oh, we have to touch this before we go. If we start to, shift on the lower timeframes, and if the M15, you start to see it give bullish change of character, or ideally a bullish swing breaker structure. So ideally the M15 actually switches bullish rather than just a bullish change of character. Then yeah, you can look for longs, especially if you see sustained bullish order flow, and then we could go from there, especially if it's in the discount, right? So I am trying to get to the point to your original question. So if we're kind of just keeping it simple, right? And we like forget about the daily, forget about the weekly, just think about the 4 hour and the M15. That's why I was trying to say keep those two, just your main time frames. The 4 hours bullish, we're expecting a higher low, cool. Let's go on the M15. I can actually get it up. There we go. So coming into the rest of the week, for now, for me, obviously it's a bit different because you guys have it as bullish. I have it as bearish. But let's just say I'm doing it the way you do it, right? And you have it as bullish. That's cool. We would now be playing within this bullish range. So the M15 is bullish. The 4 hour is bullish. We are currently in a 4 hour zone that has not been breached. So yeah, coming into Monday, I would start to look at this area here. Like imagine if this was London session right now, and you had the M15 as bullish. I would be looking potentially. I'm not in love with this price action because I don't like the way the lows are formed. You see this? This to me just looks like it's going to get smashed. But let's just imagine it's not. It's London session right now. I would be looking at this zone here because it's is it? Well, yeah. If you take the range right, you see how bit messy, right? But price came into that supply zone. It reacted. It fell to point a lower low, and it pushed up. And then this thing's in the way. There we go. So technically anywhere within this box, the demand came in, but I want to refine it a little bit more. So I'd be looking at here, right? Because that mitigated this range here. See how price came up, it mitigated. That was the last mitigation and we're gone. So for me, this would be kind of a decent POI to look for a price to come in and then look on the M1 for your entry and then boom, we'd be off. Why? Because M15 is bullish, the 4 hour is bullish. We're in a 4 hour POI. I'm expecting a 4 hour higher low. You know, we have a reasonably decent POI here. I don't love this price action. Those lows look like shit. They look like they're going to get smashed, but whatever. Don't anticipate liquidity sweeps. React to them. It's kind of my motto. So if price was to come into here, give me that entry, I would probably take it. Not my favorite entry in the world. It's pretty horrible, messy price action, but that's because of the time of day it is right now. We're coming into the end of the daily close. This is what happens, right? Whereas when we come into London tomorrow, let's say price has just been ranging around like this. What's happened? Well, we've built all of these equal lows. We have this potential M15 POI down here, okay? It's an extreme flip zone, right? Because we reacted from 4 hour supply. We pushed all the way down. We mitigated this level here. And then that's the base of where all of that demand stepped in. So it's quite a decent M15 level. I would prefer it if it was nested within a 4 hour zone. It's not, but hey ho, you can't have it perfectly all the time. So let's say it ranges during Asia. I come to my desk around 6, 7 a.m. tomorrow. We then get a sweep of those lows. We come into our demand zone. Ideally, we get a bullish change of character. Yes, at this point, the M15 would still be bearish. Okay, it'd be trading between that low and that high. But if I come into this zone and we get a bullish M15 change of character after a big sweep of liquidity, I'm going to hit that. I'm going to look for the M15 to pull back. Obviously, you can trade that directly, or then you could drop down to the M1. All right, look for the M1 change of character on the flip, and then boom, I'm going to get in long, anticipating that the M15 is going to switch bullish. The 4 hour high low is going to stick in, and we can target that weak 4 hour high, and potentially target 4 hour supply within that daily zone, and potentially beyond that if that weekly and daily pullback is going to start. So hopefully that kind of makes sense of kind of how my thought process starts to work. Obviously, it's kind of hard to give examples until price action develops, but that's typically what I would expect. If I'm coming to my desk now and I'm thinking about what am I going to do tomorrow, that's usually what I would do. I would just and that's why I don't bother with looking at the M15 until I get to my desk in London, because a lot can change between now and then. But yeah, I got on a massive rant. I think your last question you asked me was essentially, should you trade counter M15 trends? Yes, you can do it. And the example I just gave there would be the M15 would be bearish, right? Because it would take that low out. It would have had to then switch bearish to get down here. But for me, if we then got that M15 change of character, I would be happy to trade against the M15 trend. But what I would do is I would draw those M15 supply zones, right? Probably get a couple supply zones up here. And I would go, well, the M15 trend is still bearish. So we have to run with the expectation that it's going to stay bearish. So then you can look for hedges, shorts. You can partial some of your profits if you got long, or you can leave it open and then just look for the short, wait for the M15 change of character, get in short here, and then boom. And then you come down into demand. And then again, what do we wait for? You can either wait for the M15 to switch bullish, or you could just wait for an M15 change of character. And then you can go. So my advice to you guys would be maybe don't worry too much about trading with the M15 swing trend, but maybe always wait first for a M15 shock in your favor. Maybe that's an easier way to make sure, because there might be times, right, when price comes down to this 4 hour zone, say that you really, really like, and you really want to catch up a 4 hour high low here. But at this point, the M15 is very, very bearish and trading between these ranges. Maybe you could have got in with it, right? Let's say we get a bullish shock here in M15. You want to trade that, but the M15 is bearish, but your plan says only trade with the M15 trend, then you couldn't take that, which is fine. But, maybe you want to just trade M15 shocks. Now, if you want a higher strike rate, then yes, wait for the M15 to switch bullish. Wait for that high to go, right? Mark out the new range you're within, let price pull back, and now you're trading pro M4 and M15 trend. But of course, you know, sometimes you're going to miss a lot of moves when you do that. So it will come with time, guys. I can't give you, do you have to do this? You have to do this. You'll figure out what you want to have in your plan, and that's why I've got to the point where I'm happy to have a little bit of discretion there on a case by case basis. So yeah, I don't know if you have any more questions about that or if that made any sense. I hope I haven't confused you.
No, that's fine. Yeah.
Anymore. Yeah. Cool. So yeah, if you ever do feel confused, I try and advise the people, just forget about daily, forget about weekly, forget about M5, all that. Literally just get your 4-hour chart up, get your M15 chart up, mark the current swing high and swing low you are in, the swing range you are within on both of those time frames. Mark out the extreme supply zones and extreme demand zones on both of those ranges, and just wait for price to come up into the extreme supply before you look for shorts. Wait for price to come into those bottom demand zones before you look for longs. And then you can't really go too wrong. There will be times when you're trading counter trend, and there's times when the timeframes aren't in too much agreement. But as long as you know kind of where your swing ranges are, you're playing within, and you stick to shorts at the top and longs from the very bottom, and you don't do a madness, right? Don't be getting involved in trying to buy this here in the middle, because that's just what I like to call no man's land. Is it can work out, but it's not worth it. Where you want to be sticking to is, you see up here, right? That's the extreme of the range. Even though for you guys it was bullish, okay, we'll just look for the longs from down here. Don't bother with this crap in the middle, right? Yeah, that would be my best advice to you, if I can keep it simple. But yeah, I'll leave that there.
Matt, on this current price action of 15-minute, where would you define your range from this high or from here? I know that's the extreme, and the low will be obviously down here, but we've got this buy to sell that's broken structure. So is there any definition of that, or would you not count that as a range point at all?
So let's just map out the range the way I see it. Okay, so price over here. See, if you're ever not sure where the range is when you're looking at quite corrective price action, a quick little tip is just kind of look where was price really obvious, like where was the last real big obvious swing where you can't really get it wrong. Okay, for me this is pretty obvious, right? Where we had a big higher high, a big pullback, and a big higher high. Okay, so that gives us a clean starting point to start to work with. Okay, so for me, when this swing high goes, where's the lowest point that took that high? It's down here. Okay, so this becomes my swing low. Price then breaks this swing low, right? So where now is my swing high? It's the highest point that took this low after it was formed. So I look back, this was the highest point. Okay, so let me zoom in. The moment I get this bearish breaker structure, I know where my swing high is. Where's my swing low? Well, I have to wait for price to pull back at least 15 pips for me on the M15. So the moment I see this, right, it's 16 pips. The moment price has done that, now what I can do is I can mark out this low here as my swing low, right? So what I'll do is I'll then, you can do this as well, is you can draw a horizontal line across. So you now know that's my swing low and that's my swing high. Now price breaks and closes below the swing low. So where's my highest point? That took out this low after the low formed. It's this high here, right? So that becomes my swing high. So now we've had a bearish breaker structure. I'm waiting for what? I'm waiting for price to pull back at least 15 pips before I'm going to mark out a low. So let's measure this. Price pulls back, 8 pips. So that's not a swing low for me. It's just internal structure. It's just price, having a little minor pullback, whatever you want to call it. Okay, price starts to pull back again. Let's measure this. For me, from the low to the high, 12 pips. For me, that's not swing structure. So it's just an internal pullback. There's no swing low just yet. I know this is my swing high, but I don't have a swing low just yet. Okay, down here, now what do we have? Okay, price clearly pulls back more than 15 pips. So the moment that happens, now I can put that little dot there. That tells me that's my swing low. Okay, so what swing range? At this point down here, once we get that pullback more than 15 pips, what range am I in within? I am within this swing high here, yeah, because that was the highest point that took out that low. And we just continue trickling down. Now we have the more than 15 pip pullback. So this is my swing low. That's my swing high, and this is the range I'm playing within. Okay, let me use the straight line so we can do it with accuracy. All right, that's my swing high, and then my swing low is down here. Okay, so as you can see, we're still bearish because price pushed down, and it has failed so far to close below my swing low. For me, I need to see a candle closure below a swing high or low to get a true breaker structure for swing structure. Change of character is different. Okay, for here, see where we got that internal high. So for me, that's just a small pullback. It's what I call an internal high. When price comes up and wicks that, obviously it closed above it, but just imagine price wicked it, right? Took out this internal lower high to make an internal higher high, not swing structure, internal structure. That for me would be a bullish change of character. What does that tell me? That tells me that the swing pullback is probably likely to go. Okay, it's just a little signal. It's it's not amazing. It's just that first little sign that internal structure is shifting for that pullback. But remember, we are bearish. The price comes up into our extreme supply zone. This supply zone has to hold if the M15 is going to stay bearish, if it's going to continue its bearish trend. So this area becomes a high probability area to look for shorts in terms of the M15. Of course, there's caveats to that. The 4 hours bullish, coming off 4 hour demand, yada, yada, yada. But just keep it simple. From an M15 perspective, this becomes a good area to look for shorts because it has to hold if the bearish trend is going to continue. It failed to close below the low. This is what we call liquidity grabs. Okay, it's grabbing liquidity below those lows there. And now we're starting to see that movement to the upside. Okay, so for me, after we failed to close below that low, right, the swing low, we did. It's a bit messy, but for me, we did get a change of character because we had this low, price pulled back, and then it came down. And you see how it just about wicks that low? Okay, that means that this then becomes my new high. It's really messy, and then price comes up and wicks. So it's messy there, right? But let's keep it simple, right? This is the bearish M15 swing range we're within. So it's not this high here that you were looking at, and it's not any of this. This is the range. So does that make sense? Does that kind of clear up what you were asking or you were looking at?
Yeah, absolutely. Yeah, that does for sure.
So another thing to add to that is that, let's say this was Monday morning or Tuesday morning, lost now, right, London session, whenever you guys want to trade, right, and you were looking for a trade, where you go, this is where it's a bit messy because the SDM15 is bearish and we have, a decent extreme supply zone up here, but let's forget about supply and demand for a second, because remember, structure's king. And I really mean this when I say, the first time I'm looking at my charts, I'm not even thinking about supply and demand. I'm always asking myself, what is structure doing? I don't care about supply and demand yet. All I care about is structure. Okay, what range am I within? I'm within this bearish range. Cool. But then what happened? Price came up to this area. It's tried to form a lower high and it's tried to go down and break the low. But this high here has failed to do its job. It's failed to make a lower low. So structurally, what does that mean? Structurally, it means, in theory, this is a weak high, okay, because it's failed to do its job. So that makes me cautious that potentially price is going to run this high, that price is going to come up and it's going to run it. Now, it could just sweep it, right, not break the swing high and continue bearish. I have no idea, right? It's getting pretty messy. We're breaking lows. We've got weak highs and lows everywhere. It's horrible, but this doesn't fill me with confidence that I necessarily want to short from here. Okay, so from a structural standpoint, this is technically a weak high. Now, that doesn't mean that this supply zone won't play out, and it does not mean that I will not trade from there, because this is when then you have to bring in supply and demand. And what you have to see, okay, is that we do have a series of potential mitigations where supply is holding here. Yes, it didn't go on structurally to break the low, but it did cause demand to fail because it did cause price to spike through the zone. So what can happen, and you will see this happen, is that although it's structurally a weak high, in theory, supply will hold, supply is in control, and you will see that movement there, okay? But it's just understanding the logic behind it. Personally, I will, at times be happy to trade from there, but if price was to run it, I just want you guys to understand the reason as to why, I can't get it to work, as to why, it's not the best zone. It's not the best zone because structurally it's a weak high, if that makes sense. But this is where it gets a bit confusing. More advanced as you can trade it because you're just following the series of mitigations. That supply did lead to demand failing. Like for me, supply is more in control on the M15 at the moment than demand. So from an M15 perspective, I would rather short than get long. But then this is where multi-time frame analysis comes in. This gray box is 4 hour demand. You can see here, price has not breached it yet, hasn't broken it. The 4 hour chart is bullish. So you have to bear that in mind. So to give you probably an answer that you probably want to hear, but come on, what I'm actually going to do. Well, at this point, this is where it's pretty messy, and it's not clear. All the time frames are in disagreement. We're breaking lows and retracing. We've got weak structure down here. We've got weak structure up here. Just sit on your hands. You don't have to trade it. And this is where I'll just wait for commitment. And this is, I don't know if you saw the example I was just talking about 10, 15 minutes ago, is ideally you want to see Asia range, potentially it will mitigate this. And then coming into London, I'd love to see these lows get swept. We come into either this M15 POI or even better, the 4 hour POI down here. We get another sweep of liquidity. The M15 either switches bullish or at least gives us a bullish change of character. We then come into a new clear supply demand zone down here. And you see how much more like clearer it is at that point, because we've got a lot more clear higher timeframes and tensions. Price has broken out of this range. We've come down into a 4-hour demand zone. We've swept liquidity. We've then had a nice V-shaped reaction. You want to see those big orders being filled. You then want to see that bullish change of character, or potentially even a bullish swing boss on the M15. It will depend on how price action looks, right? And now what do we have? Now we have clear intentions. We have clearly the 4-hour POI looking like it's going to hold. We now have an area interest to buy, and then we're off. But when it's kind of around here where the M15 is bearish, the 4 hours bullish, we're in the 4-hour premium. This M15 demand zone failed. We have a supply zone up here, but technically that's a weak high. It's not great, and that's where yes, you can trade it. And if you are going to do it, this is where you just want to get in near the top, and then you want to remove your risk quickly and just play ping pong down to the lows, and pay yourself the majority of your profits down here. It's just a bit more advanced aggressive trading. So yeah, when it's not clear like this and when it's not confusing, my best advice to you is just wait for clearer higher time frame intentions. But yeah, because we're having that daily pullback now, I think I spoke about this in the weekly market commentary, especially after such a huge, I don't know how many pips it was, moved, multiple hundreds of pips move. It's like a cruise ship trying to turn on the lower time frames before we get the daily pullback. On the daily, it's going to look like one, nice clean pullback, but on the lower time frames, what do we get? We get all of this mess, like all the last week where it just, how many times have we got here, right? We got a bullish break of structure in M15, right? Full signal, we switch bearish again. We got a bullish break of structure in M15, full signal, we switch bearish again. We got a bullish structure on M15. Okay, now we have a double break of structure, right? One here, one here. So that double break of structure confirms both a higher high and a higher low, right? These times when it failed, we only had a higher high because we only had one break of structure. We never got a higher low because we never broke the high again. So when you only get that one break of structure, it's not a lot of confluence, but here we've finally got a double break of structure. And that's why then, because we both had a higher low and a higher high, then we saw that absolute massive volatility kick in. But yeah, but this is quite typical. You'll see price be very, very corrective because the daily's pulling back. It is what it is. It's just the market conditions we're within. But yeah, I keep ranting until someone interrupts me. That's something that I do. So if you have any more questions, or it makes sense or it doesn't make sense, then yeah, let me know.
Once a range is created, a trading range,
yeah.
There is one school of thought about, let's say we go, if we're bearish, and you have a strong high, for example, to confirm the range or the weak low, so to speak, you want to see like an internal swing high being taken. I know you go into that, but probably in a little bit of probably explain it in a bit of a different way. But what I wanted to know is, once a trading range has been created, are you expecting price to go back into the premium of the range before it continues on its bearish run? And in the circumstances where that doesn't happen, are you essentially potentially looking at lower timeframes for entries? So if we take this price action here, we've got a really strong bearish run. It has pulled back somewhat, but it's clearly not gone back into the premium of the range. But would you at this stage say, okay, this from this sort of lower time frame buy to sell? I'll clear my screen.
Sorry, yeah, I'll start moving it. Sorry.
It's all right. It's all right.
Yeah.
From this lower time frame buy to sell, would you say that would essentially be the range then, where you could look at some areas around here for an entry? I know I'm probably asking something a bit more complicated and probably not needed.
No. So I think maybe we're just getting a little bit different on when we use the word range, just because so essentially for me the range is just wherever the swing high is and the swing low is. So at this point, when we get the break of structure, we finally start to pull back. Obviously you can then draw on the premium discount. We know ideally we would like price to pull back up to either one of these zones up in the premium, but we know price doesn't have to. So can we look at this potential nearest zone? The answer to your question is yes. What I will personally do is, when we're going to move like this, and let's say price is at this point here, and I'm thinking, okay, we've mitigated high time frame supply, we've clearly switched bearish with a hell of a lot of momentum. I now want to catch that M15 pro trend short. I want to catch that M15 lower high to do what? I want to catch it to play that 4-hour pullback down into 4-hour discount and 4-hour demand. We've mitigated the high time frame supply, yada, yada, yada. This becomes a good entry. So where can I catch that M15 lower high? I'm going to draw on every single M15 POI I can see. But I'm going to be aware, if you draw on your premium discount, this ideally is really where I want to get short. but I'm happy to trade lower highs in the discount. Yeah, I'm happy to short in the discount, which is obviously not as high probability as shorting the premium, and I'm also happy to buy in the premium rather than the discount. That makes sense, right? I'm happy to do the lower probability things, but obviously I want to see decent amounts of confidence. So this is where you can't just have one rule in your plan. It just says, well, you can, but like I would never just say in my plan I'm not going to trade short in the discount. So i.e. I would be happy to trade from here, but I need to see what is the overall high time frame story. Well, one of the things I know is when you get that first initial trend change, usually that's when momentum is at its highest, and typically, well, at least euro dollar doesn't pull back that deep. Typically, not always, but typically on its first initial trend change, you'll see a shallow pullback. It will come into kind of that first POI and we'll go. So if price comes up into here on the M1 and then I see my entry model, right, flip, chock, sweep, the whole thing, yeah, I'll be happy to take that. But I'm very aware, and I'm going to be hot on my management, that could be, because it's the discount, right, this move here, that could be doing what? That supply in the discount could just be a reaction to provide liquidity to fuel a deeper pullback. Okay, so that's typically, the school of thought is with liquidity, is that's why you see impulsive pro trend moves and then corrective moves back, and that's why it's you get those deep pullbacks, because it's reacting to areas of supply to then generate liquidity. Price then uses that liquidity, comes up into the premium prices, and then boom, you get that overwhelming imbalance between supply and demand, and you see that corrective move. Again, I'm going on a little bit of a rant here, but yeah, to answer your question in short, in a scenario like this, I would mark out all of those POIs. This for me would be a valid flip zone because it comes into the extreme demand here, right? It moves in, it reacts. So that's a buy to sell on the lower time frame. So that becomes a valid POI for me. Is that a high probability one? No. It's in the discount. It didn't sweep liquidity, but it is a flip zone that led to a break of structure. It's the first initial trend change after a hard time frame mitigation. Yes, if we get an M1 entry model here during my session hours, I'd be happy to take that. But I would be a little bit maybe more aggressive with my management, just because it could come down here and push up higher. Whereas if I got short up here, I'm probably going to be a lot more hands off with my management, because I know I'm getting in a good area of value. I try and target the majority of my volume down to that low. Does that make sense? I don't know if that's entirely what you were asking, but
yeah, no. That makes sense. Thank you.
No problem. But again, it all depends on the whole hard time frame story. Where are we within structure? Like this wasn't the most ideal reversal because we hadn't actually mitigated anything specific up here. It's just a massive zoom out. It's just this big daily supply zone. This movement here. We look left. There's nothing on the 4-hour chart there for me. Yeah, we look left here. All we have is these little buy sell to wicks. The price is mitigating. Yes, it is technically a flip zone because I'm not going to draw on, but essentially, but it's a crap zone, right? It's nothing that significant. So, you have to be wary of that as well, that potentially it could be a false move. It could just be a movement back into 4-hour demand. We've only had one break of structure and we could continue higher, right? But this is why I say this in the market structure basics lesson, that for trend changes, me personally, I love to keep it simple. The moment we have that first initial break of structure and we had that first initial lower low, for me, I just say the trend is bearish now, and I just assume with a blind assumption that this is now a strong high and it will not be breached. But I'm aware in the back of my mind we have only had one break of structure. It could be a bit of an early move and we could go. And that's what I was talking about over here, right? The prior week, the high time was still very bearish, and every time we got one bullish break of structure, I was looking for longs from here because I assume that this is a strong low. But I'm aware in the back of my mind that it's not that much confirmation one boss, okay, and that's why we then broke again. And then we had another bullish break of structure here. I was assuming that this was going to be a strong low and we were going to go from here, but I knew in the back of my mind until we get that double break of structure, we have not yet had a confirmed high low, so it's risky. But I don't care. I'm still happy to assume that it's a strong low because a lot of times that will play out. It just so happened that last week the high time frames was just we had such a strong move that it just took a while to build enough liquidity before we finally switched trends. So I guess what I'm trying to say there is that it will depend. I'm not always going to hit these kind of pretty insignificant kind of zones in the middle of nowhere, but in this case it's that first initial trend change, high time frame mitigation. It was a flip zone as well. I love the momentum. I would definitely hit that for like a quick intraday trade, but I wouldn't necessarily be looking to get short from here thinking that that was going to go all the way for the 4-hour pullback. What I'd be more thinking is I'm going to take this movement to here, start to take the majority of my profits because it's probably likely price is going to want to come up and mitigate this before we go, or something like that. Obviously in this case it didn't, it carried on going and we're still chopping around here, but yeah, I think this kind of this topic kind of molds into a big discussion, a good one that we could have about management, about really managing your expectations of where you are getting in short. You can still take trades there, but you just have to manage them differently to if you were entering higher up. And that's kind of, you know, where that's how you really boost your strike rate from trading from not so high probability zones that aren't as well priced, if that makes sense. So you can trade them, but you just need to manage them more effectively or more aggressively. Okay. Just give me an okay if I've made any sense there or not. What is it? Any more
All
questions
good.
about any of that?
Thanks.
Cheers. No worries. No worries. I'm just trying to think, because I posted. I think there's I don't know if you've had a chance to see it, but there is a lesson I recently posted in the putting it together module. I believe it's called trading against the higher time frame trend. Is it that trade? No, it's not that one. It's okay. I don't think I've posted it in the one I'm thinking of. I haven't posted it in the course, but I've posted it on YouTube. And it's the one called. I'll find it for you and send it after. But I think it's the one called about trading counter trend. No, it's not. Sorry, it's called a simple tool to use to boost your profits. Some clickbait title name like that. And it's about using premium discount. But about halfway through that video, there's an example I go over where I talk about this, where essentially price was putting back in M15, and there's the 4 hour, and there's these zones here, and you can look for shorts. But again, be aggressive with your management, because it's pretty likely we're going to keep putting back again. Take a short from here, it's still in the discount, but be a bit more aggressive with your management. Like take partials down here, because we're probably coming back up here. Okay, now we're in the premium. Now when you get short, what's the expectation? Well, there's a lot higher probability that we are going to form that lower high now. So now you don't have to be as aggressive with your management. You can take a little bit of a partials here, but we run with the assumption that it's more likely we're going to now run that low. Yeah, that's kind of the difference there. But yeah, I believe that's in the YouTube video called a simple tool to help boost your profits. It's all about premium discount, but if you just fast forward to the bit where I hop on the charts, yeah, it's all in there.
Sure thing, mate. Thank you.
No worries, no worries. Just seeing if I missed anything else in the chat. How do you switch like this? I don't even know who's even still in the chat, but PJ, if you're still here, how do you switch like this on your screen from 4 hour charts to 1? So you need to have multi-chart layout set up over here. You might need a paid subscription for this. I don't know if they include that in the free anymore, but essentially if you get this set up, make sure you have symbol, crosshair, and drawings all marked out. And then if you click the bottom right-hand corner, you can flick between the charts, or if you hold down Alt and click on each chart, that will let you click in and out. Yeah, hopefully that answers your question.
Quick question.
Yeah, go on.
How many pairs do you trade?
So at the moment right now, it's pretty much euro dollar. When I traded this style specifically, I got it down to I tested about 8 pairs, and then narrowed that down to about 4 pretty quickly, which was Aussie dollar, pound dollar, euro dollar, obviously, and pound yen. But that's when I was trading, pretty much just focusing on 4 hour POIs only. So obviously it takes quite a while for the 4 hour to get in those POIs. So that's why I had 4 pairs. Then I switched to actually trading M15 POIs on their own, right? So when they're not stacked within a 4 hour. So that gave me way more opportunity, way more active. And that's kind of when I narrowed it down to 2 pairs. So I was just looking at pound dollar and euro dollar at that point. And then I found that worked quite well, but I found I was, on average, I was missing too much opportunity because my focus was split. And I found it just not enjoyable really to kind of constantly be flicking between pairs. And I would say that my performance has actually improved from narrowing down to 1 pair. But not only that, my enjoyment has improved loads. Like, yeah, like I enjoy it way more, because sometimes I literally, you guys will see this as you spend more time in the community, but sometimes I'm almost, I don't want to use the word ridiculous, but I always say to myself, like, whoa, I was way too active today. I took too many trades. I feel a bit uneasy. I'm like, why am I over trading? There's too much opportunity. I must be being too aggressive, and I kind of have to check myself. And then I can literally go, it's kind of rare, but sometimes an entire week without executing a single trade. And that's because sometimes the timeframes are aligned. It's really, really clean. I'm happy to just be on it, hit it hard, go for it. Other times when, like, it's like this, it's a bit confusing. Yeah, I could trade it. And sometimes if I'm in the mood, I will. But other times I'm just like, like I'll just leave it alone. I'll come back in a day when it clears itself up, and I'll go work on back testing. I'll do things for Photon. I'll create lessons. I'll do other projects, right? Now you know what you may want to do is just go, okay, well on those days I'll go look at another pair. And that's what you can do. I know some people do that. Sometimes if euro-dollar looks like crap, they'll go look at Aussie dollar for that day or whatever. Okay. The only thing I'll add to that is if you are someone who doesn't want to trade any lower than the M15, then definitely you can consider looking at 2 or 3 pairs. I think that is achievable. It is not necessary though. Literally, if you master M15 entries on euro-dollar, I promise you, it will blow your mind at how much R is there just on one pair alone. Okay, obviously the highest probability ones are going to be using those risk entries on M15s nested within 4 hours, so there's not going to be tons of those every week. But if you want to be a little bit more active, right, because I know what am I doing, right? Like I said, if I could summarize my trade plan in one sentence, it's trading M15 POIs with M1 entries, but all you're doing is just entering on that M15 POI directly, right, rather than jumping down to the M1. And a lot of the times, especially if you take the EQ, your stock's probably only going to be 1, 2, 3, maybe 4 pips bigger than mine, which it's not the end of the world, right? People would kill themselves, and most other people, to make 5R in a month, let alone, you guys will be able to, this isn't a sales pitch, but you guys will be able to, pull those out your ass pretty quickly, eventually. And like, it gets to that point. I think I had a discussion about this with a few people today that like, and I fall victim to this all the time where, I'm my trade's running 10R and I'm like, that's the bare minimum I expect. So then I'm trying to push it to 30, 40R. But it's like, how when you're running 10R? Like, do you know what I mean? Or even when you're running 5R, like just, that's amazing. You know how quickly that can compound. You only need one of those a month. Some of you might think, well, on my capital, you don't amass not that much, but this is where you have to think about like trading that bigger capital, 5R on that bigger capital. It's a lot, and you don't have to spend all day slave to your charts, like taking these, crappy trades in the middle, stressing yourself out, making your broker rich with all those commissions. Like, just chill out. Okay, M15 is confusing here. It's not in line with the 4-hour chart. I'm going to stick to those high probability moves. And I went on a bit of a rant there, but yeah, my advice would be focus on one pair. Euro-dollar is obviously my favorite. Pound-dollar is always tempting because it has a high ATR, high average true range. So that basically just means, it moves a lot more in a day. And you can get in with a 3 pip stop, so only 1 pip bigger than probably euro-dollar, at least I found, but it would probably move way more. So the RR is definitely higher on pound-dollar, but you just have to. I think pound-dollar can be a little bit tricky to trade because of that. My experience in my testing, you have to have a very good understanding of liquidity on pound-dollar. I've found that you have to really pay attention on which zones took liquidity, where there's inducement, things like that, and it loves to come to the extremes. I find that you get swept a lot on pound-dollar, whereas I find euro-dollar is a bit more black and white. It's a bit more simple. I personally just have a bit of a better read in it. So I was tempted to keep pound-dollar in there for a long time, just because it tempts me with the amount that it moves in a day. But again, it's for me, I'm at that point in my life. It might change, but right now I love having, like, trading has become really enjoyable for me, and it hasn't been that way really forever until kind of recently, where I found a really good balance. I love just focusing on one pair every day. I know what swing ranges I'm in. I'm looking at it every day, so I just almost know where it is before I even look at the chart. You feel in tune with it. It's simple. If it doesn't look great, take the day off, go do something else. Do you know what I mean? So yeah, and also the other thing I would say, just to end it before I run any longer on that, is if you're kind of new to the style or just new to this community and you're not sure which pair to look at first, even if you don't want to trade euro-dollar long term, I recommend to everyone you just follow it and do your markups, because what you can do is you can compare your analysis to mine every day with the markups, and that might just help to kind of speed your progression along each day. But yeah,
thank you very much
cool.
for that.
Yeah, no worries, man. No worries at all. Got questions over here. I think a few guys have left. No worries. Cheers, Kieran. Cheers, Chris. Cheers, Roberto. Cheers, Gilberto. Sorry if I've pronounced your names wrong. Cool. Yeah. I think if there's any more questions, we'll probably start to kind of wrap it up now. We'll leave that there, I think. Anyone?
Thank you very much for your help.
No worries, man. It's honestly, I've enjoyed it. It's good to have some fresh new faces in here. I don't know if you guys know, but basically I Photon, I think I launched it in March 2020. Basically didn't do any marketing or anything. Just basically had a few guys in there None of them are in here tonight. They're usually in here, but hopefully you guys will get to meet them soon. And there's probably about 3 or 4 of them. Kieran was one of them, who basically I just had in that group for the last year or so. Kind of just kept it running as a passion project. Actually ran Photon at net loss for over a year, just to kind of keep those guys. And obviously you guys have probably seen being a lot more active on social media, kind of finally marketing it properly and doing the whole YouTube nonsense and Instagram stuff. So yeah, it's been good to have like loads of new faces in here and kind of build the family from here. So yeah, I've enjoyed it. I look forward to kind of getting to know you guys a bit better, and hopefully you guys can kind of start to kind of pick up my style, and as you obviously have more time to get through the course content. Yeah, just really enjoyed it, and thanks for coming again. These run every 2 weeks, just in case you didn't notice as well. So yeah, just bring your questions like this. I've really appreciated you guys brought the energy and the questions and stuff, and weren't afraid to share your charts. I absolutely love that. So yeah, keep it up.
Thank you very much.
No problem, man. No problem.
Yeah.
Thank you very much. That's useful. Last time.
Yeah. Have a good week.
You too, lads. Have a good one, and yeah, I'll catch you next one. Hit you up in the Discord.
Nice.
See you
Thanks,
guys
man.
tomorrow.
Take it easy, fellas.
Cheers, man.
Cheers, lads.
Yeah.
Peace out.